A minute to go until the start of cash equity trading. I'm Francine Lack right here in London. Now, these are your top stories. The threat does remain. President Biden says the U.S. has not verified a pullback of Russian troops, but the prospect of reduced tensions over Ukraine actually boosts stocks. Now, price pressure watch. Chinese inflation slows, giving the PBOC more room for policy action. UK January CPI comes in slightly hotter than expected. Plus, Heineken will raise prices to pass on higher raw material costs to consumers. We'll speak to the company's chief executive, Mr. Dolf van der Bink, in a few minutes from now. Now, first of all, let's look at the futures because it could be a big markets day. Now, of course, the focus is on what's happening in the Ukraine, but also the focus is on the Fed tightening and how that reprices some of the stock markets overall. I have a great chart, which we'll get to in a second, looking at not only some of the havens that have really moved in terms of volatility, but also we need to look at liquidity from central banks, what does to markets, and of course, what it means for some of the ratios out there. My chart of the day is actually looking at Chinese equities. Now, the FTSE 100 actually opening up flat, always a good thing to look at oil. So you can see Brent crude currently at 94.02, gas gaining some 1.5%. Now, oil still above $92 in WTI. Of course, traders assessing the worries about this potential disruption to commodity supplies, but also some of the havens. I'm looking, for example, at these longer maturities in gold that sold off in the past 24 hours, largely maintaining the losses, but they're not actually accelerating. The CAC 40 just opening 0.4% higher. The IBEX also gaining some 0.2% higher. And then if you look at the cross asset, or certainly some of the things that we need to watch out for, we had a big inflation print over here in the UK, so that seems to force a hand, or at least support the narrative that we've seen in the markets that Bank of England will increase rates. We'll also look at pound. All right, if you look at ruble, 74.99, as we were saying, NYMEX at 92, the US 10-year yield at 2.04. And then there's one thing that I really like, because we try and figure out some of the misnomers out there in the markets, and there's a lot of Chinese data. There's a lot of also things coming from the president. So let's look at the Shanghai Valuations. This is one of the best terminal charts that I've seen today. And I know there's our MLife strategist saying that, look, if you look at some of these valuations, it's actually too soon to call a bottom for the fragile stock market over in China. But if you look at softening multiples, they may lure back some investors. This is the Shanghai Composite Forward PE ratio. But we've also seen a flurry of speculative buying looking at some of these Shanghai valuations. Now, if you look at the forward PE for the Shenzhen, which is not one that we always look at, it's 18 times that of the Shanghai Composite, which is at 11 times. So again, that's a differential that certain traders that are specifically looking at Chinese markets may play into. Now let's also get over to our Bloomberg MLife managing editor, Mark Cudmore, who's looking at Mark's chart. And you're looking, Mark, at some outperformance for stocks in Latin America.
Yes, I am. And it's kind of similar to the idea of you looking at Asian stocks. And I do love that Shanghai Composite one. Personally, I think the greater China story is better played through Hong Kong stocks that do have exposure to the China mainland economy, but are even more discounted, actually. But that's a debate for another day. I want to draw attention to Latin American stocks. Now, this is a ratio of the MSCI LATAM index relative to the S&P 500. You don't normally have a world where the S&P 500 is falling. We're worried about the US economy, the tightening conditions there, and Latin Latin American stocks are surging, but we do have that this year. The ratio is up 20% year to date, and that roughly matches the nominal outperformance, with the Latin American MSCI index up about 13% and the S&P 500 down about 6%. And this looks like quite an extreme move. 20%, almost 20% outperformance year to date is really, really quite super impressive. But I think that this dynamic has much further to go, and I want to draw attention to this chart looking much longer term on a 30-year horizon to show how irrelevant this move looks compared to what we've done. There you go. That's that 20% tick up in the ratio. You don't even see it. And that's because Latin American stocks have been underperforming for so long. It's been angst about the political situation. Generally, EM's been very discounted. It's been worried about their external balances. There's just been a whole number of very, very negative stories. People have just soured on EM. It's been all about trading the big cap names, US tech. That has been the story of the last decade. But I think it's about to change. I think this dynamic from the mid-2000s, a commodity super cycle, an inflationary environment, a Fed hiking cycle, that is the one that we're more close to now. Now, we may not see quite this level of outperformance, but I do think there's a lot of opportunity in the coming years for Latin American stocks to outperform US stocks for a sustainable period of time.
That's really interesting. Mark, thank you so much. I think that the Colombian economy grew the most in 115 years. And then, of course, there's the avocado spat, which I know we joke about a little bit, but actually it's a huge deal for Mexico as they try to resolve their spat with the U.S. So we'll have a full focus on Latin America. We have an emerging markets actually guest in about an hour and a half from now. Our Bloomberg MLive managing editor, Mark Cudmore. Now, President Biden has said that a Russian attack on Ukraine is still very much a possibility. This comes as NATO defense ministers are due to meet today in Brussels to discuss the crisis. And the Kremlin has repeatedly denied plans to invade. Well, Bloomberg's Europe correspondent Maria Tadeo is at NATO headquarters for us. Now, Maria, Putin points to de-escalation. The West is looking for proof. Where do we go next?
Well, Francine, and that is really the focus point in this meeting. Defense ministers from NATO will meet with the Secretary General in just a few hours. Now, what they say is that we want to see proof. We've seen in the past that Russia says it's doing one thing, but in reality, what's happening is very much the opposite. So they want to be able to verify this and do it independently. So a lot of the focus now from the West is to say it's great that we're pulling back on paper, but we want to see it in real life. They also say that diplomacy is, of course, the way forward, but in reality, and I'm citing the quotes here of the Secretary General Stoltenberg, they still believe that Russia has positioned military equipment and also troops that could lead to an invasion. So there is some cautious optimism, but when you go behind the scenes, many will tell you we've seen this before from Russia. This is their tactic. They say they do one thing, but in reality, there's equipment also that they leave behind that could be quickly reinstated in a future invasion if there was to be one, which again, to be fair, the Russians deny.
Maria, Russia still doubling down on security concerns, particularly over East Ukraine. What does this actually mean? Is this an excuse to do something on that flank?
Well, yeah, Francine, and if you look at the market yesterday, there was this relief rally, this idea that Vladimir Putin in his press conference with the German Chancellor said, I don't want to see a war in Europe. This is something our generation does not want to see. But if you look at the details, Vladimir Putin is not really changing his talking points. He still says that there is a very real conversation to be had around security in Europe, that Russia continues to feel threatened. And he also said when we look at the situation in eastern Ukraine, for Russia, in the eyes of the Russian government, what is going on there is a Russian genocide. And that is a problem for us. Where this means that they walk back on the Minsk agreements or they try to change that really remains to be seen. But Russia is now moving away from its demands.
Thank you so much. Our Europe correspondent there, Maria, today, of course, from NATO headquarters, and we'll have two great interviews with ministers on the Ukraine situation. Now, let's get also into the key market drivers with our Bloomberg MLive strategist, Ven Ram. Ven, thank you for joining us. In terms of the impact that, of course, this geopolitical concerns between Russia and Ukraine, but also Russia and the rest of the world, what does it mean for cross-asset?
Morning, Francine. I mean, the toy in tensions is welcome. And we are seeing it playing out in the Euro CHF and USD JPY. But the longer-term implications are for the ECB, I think, because how closely the region is going to be impacted. And even with those tensions that were on the rise earlier this week, we saw that market pricing for ECB rate hikes wasn't coming off. So if anything, is likely to put the ECB back, the chatter back about ECB having to hike rates at some point this year.
Yeah. So, Ven, we also get the Fed minutes. Could they actually move markets? There's already so much tightening priced in.
Yeah, absolutely. I think there's a lot priced in. I think it would take a very hawkish kind of surprise to move the markets from here because let's face it. I mean, the markets have kind of overtaken developments, have overtaken what we already know about the Fed's January meeting, particularly from Bullard. And the key question for markets is, are we going to get a 50 basis point rate hike? And that discussion will be key to the markets. And apart from that, there is also lingering chatter about whether we are going to get an out of cycle policy hike, some emergency policy hikes. The Fed hasn't done one in years and decades, but now the question is being asked. Why is that question being asked? Because if you rewind the tape back to 2020, early 2020, the markets where treasury yields were plunging and the Fed rates were much higher than the treasury rates. So the Fed came out in March on one fine morning and cut rates by 50 basis points, then followed it up by another 100 basis points a couple of weeks later. Now the boot is on the other foot. Are they going to go in a similar fashion, but on the other side, raising rates?
Talk to me a little bit about this UK inflation overshoot. You know, it adds a lot of pressure on the Bank of England. Does it almost mean that a second hike is actually a done deal?
I think a second hike is pretty much a done deal. I don't think there's any question about that. But also the question of the quantum of hikes that we are going to get in March. I think the pointers are that we may get 50 basis points because if you look at the inflation prints, as you mentioned, those were beats, and not only the headline inflation print, but if you look at core print, and if you look at the more important RPI print, which is the principal measure for bond investors, that was a huge beat as well. And that shows that inflationary pressures are unchecked at the moment, and the BOE, like the Fed, is way behind the curve, and they have plenty of catch-up to do. And the quickest way to do that is a 50 basis point hike. I know that there are concerns raised about whether the economy can withstand it, and I think that the UK economy has been pretty resilient, and I think they need to go sooner rather than later because before inflation and expectations get even more entrenched and real yields go even lower.
Great, thank you so much. Our Bloomberg MLive strategist, Ven Ram, joining us with all of the market moves. Now, coming up, your Heineken is about to get more expensive. Sorry, that's the bad news of the morning. The company says it's passing on higher raw material costs to consumers. Don't miss our interview with the Heineken Chief Executive Officer, Dolf van der Brink. He's up next, and later this hour, we'll also talk Ukraine and global trade with the new U.S. ambassador to the OECD. He's Jack Markell. That's coming up in around 20 minutes from now. This is Bloomberg.
Has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
Welcome back to the Open, everyone. We are 13 minutes into European trading day, and you can see European stocks supported not by much, but they're supported around 0.4%. The focus, of course, on the Fed minutes. The focus, a bit of data also elsewhere in the U.S. Here in the UK, we look at that inflation print, stronger than expected, and we await news from geopolitics to see whether the West can actually confirm that Russia keeps its promise and pulls back some of the troops there on the Ukrainian border. Now, Heineken says the longer-term outlook has become cloudier as inflationary pressure squeeze consumers. Now, the world's second largest brewer says raw material, energy and shipping costs will rise by a mid-teen percentage this year. Despite this, the Dutch company is continuing to target a 17% operating margin in 2023. The share price is gaining some 1.1%. Well, we're delighted to be joined right now by the Heineken Chief Executive Officer. He's Dolf van der Brink. Mr. van der Brink, thank you so much for joining us. A lot of people are wondering, how much could you actually increase prices by? I know, I think there was talk about a courageous increase. What does that mean?
Hi, good morning, Francine, and thanks for having me. Yeah, I understand, there's a lot of focus now on the pricing and the inflation. If you allow me, I would like to start by saying that we actually had an excellent year last year, a big bounce back with volume growth, 12% revenue growth and profit growth. For this year, we still believe there's a good upside on the revenue side as we're still cycling COVID lockdowns in 2021. But indeed, the big unknown is, how much of pricing are we able to pass through? And over time, what will be the impact on the underlying consumer demand? So far, volumes have been quite resilient. As you may have seen in our release this morning, we already took 8.3% pricing last year, 11% in the second half. That's about the highest pricing that we have seen in a generation. And volumes held up pretty well. I guess why we're a bit cautious in our outlook is that we don't know for how long that will last, as what's happening right now is rather unprecedented.
Yeah, it is 100% unprecedented. And frankly, sir, you face a lot of, raw material price pressures like a lot of other companies, and it's not easy. So how do you see the kind of price increase that you can pass on to consumers without hurting too much demand? I mean, this is difficult to choose. So how do you think about it?
Yeah, we try to find the right balance. We're quite clear that the absolute input cost increase we try to pass on in pricing, as we've been able to do in the second half of last year. So this is not new for this year. It actually already was happening in Q4 of last year. Again, we were able to get the pricing and the volumes remained resilient. A lot of the pricing for 22 is already locked in. The negotiations with major retailers are advancing well. We're not the only ones. Everybody's facing the kind of same input cost pressure. So, so far, so good. But indeed, we are deliberately being a bit cautious on the outlook.
Yeah, and that's fair enough. And actually, your share price doesn't even reflect that much. I think currently it's up some 1.8%. But it's interesting to understand from you where you think you can increase prices. So first of all, if you look at craft beer, which is close to a lot of people's hearts, does that get wiped out because of inflationary pressures?
Interesting. When you look, for example, to our own volumes, our premium brands are growing at double the rate of our total portfolio. Total beer portfolio up almost 5%. Our premium beers were up 10%. Last year, brand Heineken was up 17%, and up double digits in 60 countries across the planet. So what we're also seeing that brands with strong brand equity, with strong brand power, actually are quite resilient given the pricing environment. So far, we are not concerned for a kind of major downtrading happening. I guess it's more of a concern on the broader resiliency with consumers as, their disposable incomes will be impacted by energy cost and the general inflation.
But so again, how do you think, so in the UK, inflation could hit 7%. That will also hurt, of course, how much, disposable income people have. So can you increase prices in other parts of the world and then subsidize the UK? Or do you raise prices, on premium brands in the markets where inflation is increasing the most? I don't know how you think about that.
Well, what we're looking at is at the input cost, and the input cost affects different countries in a different way. You know, typically emerging markets where you also have a currency exposure have a higher increase in the cost, input cost inflation. Therefore, we're taking more pricing historically, but also last year, and we also expect it for this year in emerging markets like in Brazil and Nigeria. Price increases, for example, in the Western European markets will be lower than that. But still, again, the principle is that we're trying to offset the absolute input cost increase country by country in absolute terms.
When do you expect the bar, restaurant, nightclub trade to recover in Europe?
Well, first of all, I'm a very happy man today because last night the Dutch government announced that the last restrictions on the on-trade in the Netherlands were lifted. We see that happening across Europe. The on-trade has been bouncing back. Last year it was across the year about 30% still down with pre-COVID levels. The last quarter was around 15-20% down. We still expect it to be down for this year versus 19, but sequentially to improve. Around 85% of the outlets have reopened. So it will take a bit of time, but the direction of travel is positive.
Could we just go back to some of the price increases? And we saw that with a lot of your rivals, including, you know, some consumer goods that are not direct rivals, but Unilever saying that actually these inflationary pressures will actually impact profitability for around 2 years. Do you see, you know, a similar kind of longer term impact? And in the medium term, could we see in certain premium brands or certain sectors, you know, a price of a Heineken or, you know, one of your other brands go up 10%?
Yeah, so we have good visibility on the input cost development for 22. That's why we're giving a more specific guidance on the margin expectation for this year. There is limited visibility on the input cost for next year, 23, and that's exactly where we are cautious and say we give an update later in the year. There are different hypotheses out there. What we're starting to see, because we are hedging our exposure about 12 months out, that actually we're starting to also see inflation, you know, happening for early next year. But again, we rather be cautious and wait until we have higher visibility on that.
What does it mean for the M&A front? So I know you're looking at a South African brand, Distel Group, that said that they'd be happy to be bought by Heineken. Is there any other opportunity out there because of these inflationary pressures? So I know it's, you know, it's difficult for the consumer, it's difficult for you if you have to increase prices because of raw materials, but actually, do you also scoop up bargains?
Yeah. By the way, we received very good news yesterday. The shareholders of Distel voted in favor with a very strong majority in favor of the deal. So we're excited. Hopefully, in the second half of the year, we can get regulatory approval. We are excited what this can bring to our business. You know, given the cider, flavored malt beverages, wine, spirits portfolio. I don't see a correlation between new M&A opportunities in the context of inflation. We're always looking at enhancing and strengthening our footprint, like we're doing with the Distel deal, as well as what we did with UBL in India in the middle of last year.
Thank you so much for joining us today. The Heineken Chief Executive Officer there, Dolf van der Brink. Of course, a conversation on some of the great brands, the acquisitions, but also inflation with these raw materials going up. We'll have plenty more on that throughout the day. Now, coming up a little bit later this hour, we'll also talk Ukraine and global trade with the new U.S. ambassador to the OECD. He's Jack Markell. That's coming up in a few minutes from now. This is Bloomberg.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Welcome back to the Open, everyone. 24 minutes into the European trading day, and this is the picture for the markets. We're seeing some actually gains across the board with the stocks. Europe 600 gains from 0.6%, similar gains for the DAX, the CAC, and the FTSE 100. The focus not only on geopolitics, which seems to be abating, or certainly markets are not that worried about the prospect of heightened tensions in Ukraine. President Joe Biden did though say that they had still verified Moscow's movements, but the focus will now be on Fed minutes and the potential hiking cycle. Oil rose also as traders assessing some of the worries about this potential disruption to commodity supply. So we'll have plenty checks on the markets and some of the corporate stories underway as well. Now let's get straight to the Bloomberg Business Flash with Laura Wright. Hi, Laura.
Hi, Francine. Airbnb shares jumped in extended trading after it reported fourth quarter revenue and profit that beat estimates. Remote work policies and a resurgence in vacation demand is driving short-term bookings despite travel disruptions caused by Omicron. The company says people are staying for longer periods, with almost half of the number of nights booked in the fourth quarter for stays of a week or longer.
Even if people do, a lot of people return back to the office, all you have to believe is they're not going to go back 5 days a week. But we do think more and more people are going to work remotely over the summer with family. They might take them somewhere, get a summer rental. But we also just think that we're going to have 3-day weekends a lot more frequently for people, where they might work from an Airbnb on a Friday or a Monday and go away for that weekend.
Roblox shares have tumbled in after-hours trading after it reported bookings that missed estimates in the fourth quarter, reflecting a retreat from the pandemic-inspired boost. The game platform company saw much of its growth come from countries in Asia, Latin America, and Europe. And in a shift, more than half of Roblox's user base is now over the age of 13. That's the Bloomberg Business Flash. Francine.
Thank you so much, Laura Wright in London. Now we'll have a full market check, looking at some of the knowns unknowns. We'll look at, of course, valuation. This is my favorite chart of the day, looking at PE valuations and PE ratios in the Shanghai Composite. S&P futures also on the way up, down gaining some 0.2%. The focus on commodities and possible scarcity. Coming up, our interview with Jack Markell. This is Bloomberg.
early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. The threat remains. President Biden says the U.S. has not verified a pullback of Russian troops, but the prospect of reduced tensions over Ukraine boosts stocks. We'll discuss, of course, those geopolitical risks, global trade, and the economic recovery from the pandemic with the U.S. ambassador to the OECD, Jack Markell. He's on shortly. Plus, price pressure watch while Chinese inflation slows, giving the PBOC more room for policy action, but UK January CPI comes in slightly hotter than expected. Straight to the markets, and that's where the story is. I'm looking at VIX. Volatility actually is one that we need to watch out for, because if you look at the volatility gauges for both the S&P 500 but also the treasury markets, they're sitting significantly above their 12-month moving average, a sign that traders remain on edge about risks such as the Ukraine standoff, although you can see a liftoff for some of these equities with the European stock 600 gaining some 0.4%. Now, oil above $92 a barrel is really one thing that we're watching out for. Again, this is as traders try to assess the worries about this potential disruption to commodity supplies. Now, let's get on to some of the other things that we're watching, which is a nice sector move, for example, for the European stock 600. Just a reminder that central banks across the G10 ultimately delivered about half a percentage point of half of the 1 percentage point increase in the average benchmark that rate traders had priced in. So really, perhaps stocks will need a similar modest pace to rally this time. We're only seeing telecoms and actually some of the consumer goods on the downside, with a nice liftoff for chemicals gaining some 1.3%, construction and technology. Now, this is my chart of the day. It's an interesting one. It's a little bit different, but actually, given the news with PBOC and with China, I thought it was a perfect one to look at today. And it's, I took it from our MLive blog, which I urge everyone to go and look at it. It looks a little bit too soon maybe to call a bottom for China's fragile stock market. Now, we did see softening multiples, luring back some investors. The forward P for the Shenzhen composite is at 18 times, and that of the Shanghai composite is at 11 times, with both numbers just below their 5-year averages. Bottoming could be rather a gradual process, and you can see there some of the things that we're watching out for. So that's an inflation slowdown, which we'll talk about a lot more, and then we also have the one looking at P ratios. Now, my next guest is the recently appointed U.S. representative to the OECD. Before taking up the role, Jack Markell was a businessman and politician who served 2 terms as governor of Delaware. Now, he also recently served as President Biden's Afghan's refugee resettlement lead. Well, Ambassador Jack Markell, U.S. representative to the OECD, welcome to Bloomberg. I know you know the president because, of course, you're both from the state of Delaware, so it's a pleasure to speak to you, Ambassador. You're a long way from Delaware, but a lot of the conversations about relaunching an economy, about some of the things, including inflationary pressures, is really at the forefront of what you're trying to do. What's been your biggest surprise as U.S. ambassador to the OECD about some of the challenges that the economy is facing?
Well, good morning. It's great to be with you. I'm still quite early. I just started last week, and so far I've really been getting to know the team at the U.S. mission to the OECD, a terrific team, and we're all so excited about this opportunity to work through one of the most important multilateral economic organizations anywhere. And we think this is a really terrific moment in time for all of us, all of the members of the OECD, to prove that we can deliver for our people.
Ambassador, a lot of criticism, of course, has been made on some of these multinational corporations, something about the WTO, the OECD, and others. Can you confirm the U.S.'s commitment to those?
Well, absolutely. I mean, I met with President Biden just a couple of weeks ago, also had a conversation with our Vice President Harris, and they, like all of us, are really committed to multilateral diplomacy. And this is a particularly important moment in time when democracies and market-oriented economic systems can prove that we will deliver for all of our citizens. There are obviously other models out there, And we really have to show that like-minded countries like ours can get the job done for the people who live in our countries.
Ambassador, of course, you were key in trying to help with some of the Afghan refugees. I don't know how you look at the situation right now in Ukraine with the possibility of a huge influx from Ukraine into neighboring countries if something ugly there were to happen.
Well, this is why the president has been so clear that we are pushing for a diplomatic solution. And I think also it's been so clear he's been working energetically, as has our Secretary of State. Our Secretary of Defense is in Brussels today to work with so many other members of the international community. It is such a good example of why these multilateral organizations are so incredibly important. When we think about the kinds of issues that we need to solve, whether it was the work that was done last year on global taxes, whether it's the work on climate change. These are not problems that can be fixed by one country alone. And this is exactly why we are so committed to the OECD as well as to other multilateral organizations as well.
Ambassador, what do you think the biggest stumbling blocks are to getting this tax agreement passed by various jurisdictions within the OECD countries?
Well, the good news is that so many countries signed on, and that represented enormous work by the terrific people at the OECD. I've had an opportunity now to meet with the Secretary General, Matthias Cormann, who is really, I think, a terrific leader for the organization. So many countries worked very hard, and now, of course, the hard work in each individual country. And I'm optimistic that the U.S. will do what it has to do to pass the legislation. But we're all very well aware this is a big undertaking in many, many countries across the world. But at the end of the day, it's the right thing to do. It levels the playing field. It provides more certainty to global businesses. And it really is these big, tough issues, whether it's taxes, whether it's climate change, that organizations like the OECD and the OECD specifically are really very well designed to take on.
Yeah, is there a danger that the tax agreement could fall apart entirely?
Well, we're optimistic. Again, I mean, I think if you look at how much work so many countries, including the United States, put into making it happen, obviously Secretary Yellen from our Department of Treasury worked very cooperatively with other members of the OECD as well as non-members of the OECD to make it happen. So the first step was getting the big agreement, both Pillars 1 and Pillars 2, Pillar 1 and Pillar 2 signed on. Now a lot of work has to happen in many, many countries across the world, but we in the United States are certainly committed to making sure that we do our part.
What are your other top priorities as top U.S. representative to the OECD?
So as I mentioned earlier, one is to really prove that organizations, countries like ours that belong to the OECD, which value and respect human rights and democracy, transparency, market-oriented economic system can deliver. That's number one. And number two, I firmly believe that American workers, American businesses can compete with anybody so long as there's a level playing field. And I really do believe that the OECD is one of the most important organizations in the world when it comes to making sure that, in fact, there is a level playing field on things like intellectual property, on things like anti-bribery and anti-corruption. The OECD has long been a leader. I look forward to continuing to work with the other ambassadors as well as our team and the members of the Secretariat on that issue as well. Yeah. But I'm excited that the OECD is so well positioned to take on these, frankly, really big, difficult issues, such as climate change, particularly where one country solving the problem is just not going to be enough. There are so many problems that are bigger than any one country. And when we work together here in a collegial way, with countries representing 2/3 of GDP, setting best practices that other countries can sign on to as well, this is really an exciting opportunity.
Ambassador, I think last time I was at the OECD was about 5-6 months ago, where we had an interview with Secretary Blinken because of, well, it was right on the back of the spat on the submarines. Is, you know, France over now that snub? Has the relationship between the U.S. and France been fixed?
Well, I'll let the French speak for themselves, but I can tell you that the President, the Secretary of State, all of us understand what a valuable relationship we have had, the United States has had with France over centuries. It's certainly one that I look forward to building on. I did sit down with the French ambassador to the United States before coming over, and we are very excited to work with the French. The U.S. has a brand new ambassador to France, Denise Bauer, who is just a terrific ambassador, previously served in Belgium. I know that she will do a great job, and I'll do everything that I can to support her for sure.
Ambassador, thank you so much for joining us today. The U.S. Ambassador to the OECD, Jack Markell, joining us from Paris. Now, coming up, UK inflation unexpectedly accelerates in January, adding pressure for big BOE rate hike bets. Well, we'll look at the numbers next. This is Bloomberg.
Variant and the latest wave have an impact on not only consumer trends but your business? And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Welcome back to the Open, everyone. 43 minutes into European trading day, and you can see there's a bit more of a liftoff in the European stocks than there was just 15 minutes ago. Stocks are rising this Wednesday. Traders, again, weighing the impact or the prospect of diminishing tensions over Ukraine, with at the same time the prospect of tightening global central bank policies. Of course, the impact of rising inflation on central bank policies is key to the markets. We have the Fed minutes a little bit later, and we also have a couple of data points. Now, there was also this landmark ruling from from an EU court. Poland and Hungary today really facing this important ruling from the EU's top court that could lead to both countries losing access to billions of euros in budget aid. Now, the two Eastern renegade countries, like some call them, last March had challenged some of the things that we heard from the bloc because they wanted to introduce tough new powers linking payments to their adherence to democratic standards, the rule of law. The top court coming back today saying they have backed the EU and their ability to cut funds to Poland and Hungary if they do not respect the rule of law. Now, it doesn't mean anything will be cut right now, but it does mean that the EU has said that they have now enhanced powers to link it to the democratic standards. Now, onto inflation here in the UK. It unexpectedly accelerated for a fourth straight month in January, piling pressure on the BOE to deliver an aggressive interest rate increase next month. Joining us now is Bloomberg's UK economy reporter, Lizzie Burton. So, Lizzie, I mean, given the CPI data that really beat expectations, first of all, what drove the inflation data? And then we'll talk about the Bank of England.
Yes, well, it was a new 30-year high, and it wasn't even expected to accelerate inflation in January. It was driven by clothing and footwear because the discounts in the January sales were smaller than any time since 2005. So retailers really trying to claw back their losses. Also, higher energy prices, second-hand car prices, same story as previous months. Somewhat offset by restaurants and hotels and transport, which is why it just beat expectations by a beat. But as you say, it piles pressure on the Bank of England to go big in March.
Yeah, and we have a great chart actually charting some of the inflation in the UK. I don't know whether that changes the bets on the markets, what the Bank of England does. An interest rate hikes almost seems like a done deal. I guess we wonder whether it's 25 basis points or 50.
Exactly, and if it's 50, it would be unprecedented in the bank's independent history. This figure compounds the data that we've already had. You've got the GDP figure stronger than expected, the jobs data showing that the labour market may be tight, but it's not delivering real wage growth. So that pressure is there. We were already so close to it. The 4 of the 9-member Monetary Policy Committee already voted for a 50 basis point hike last time, but Bloomberg Economics actually sees 25 basis points in both March and May.
Yeah, I have to say, Bloomberg Economics, the only one that was right also for that October or November meeting. What does it mean for sterling?
Oh, well, it really depends on whether we get 25 or 50. But, it'll be interesting to see how the markets react to this today.
Okay, Lizzie, thanks so much. Lizzie Burden there with the very latest on the UK. Now, we'll have plenty more, of course, on pound. You can see currently at 135.60. I mean, the one thing that we need to look at is also differentials between, for example, the Bank of England and the Fed. We'll have plenty more on inflation worldwide. We'll also look at the impact that liquidity from central bank has on markets, including stocks. This is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. there are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this story.
How are you thinking about those dynamics?
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Welcome back to the Open, everyone. We are 49 minutes into European trading. Then you can see stocks are actually rising. Traders weighing the impact of diminished tensions over Ukraine, whilst at the same time trying to process all these inflation prints, especially here in the UK, and what that means on central bank policies. Now let's get straight to the Bloomberg First Word News with Laura Wright. Hi, Laura.
Hi, Francine. President Biden says a Russian attack on Ukraine is still very much a possibility, but that diplomacy should continue. Earlier, Germany's Olaf Scholz met with President Vladimir Putin for 3 hours of talks in Moscow. Western allies reacted cautiously to a Russian statement that it was pulling back some troops. Russian officials have repeatedly denied that an incursion is planned. Senate Republicans have blocked a vote on President Biden's Fed nominees in a dispute over Sarah Bloom Raskin's nomination for vice chair for supervision. Republicans say Raskin hasn't adequately addressed questions about her role as the board member of a fintech company. Senate Minority Leader Mitch McConnell says Biden should find a, quote, better, more mainstream nominee. Prince Andrew has agreed to settle a lawsuit in which he was accused of sexually abusing a 17-year-old girl introduced to him by the financier Jeffrey Epstein. Court documents show that Prince Andrew will make a substantial donation to the charity of his accuser, Virginia Giuffre, and declared he never meant to malign her character. Andrew has consistently denied the accusation. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg, Francine.
Laura, thanks so much. Laura Wright in London. Now, eyes on China to see how officials are going to navigate their slowing economy. The latest inflation data shows consumer and producer prices eased more than expected in January. Now, speaking at a G20 panel earlier, the People's Bank of China Governor Yi Gang said the central bank stands ready to support the economy.
We will keep our accommodative monetary policy flexible and appropriate, and increase support for key areas and weak links in the economy.
Well, let's bring in Bloomberg's China economy editor, James Maker, in Beijing. James, thank you so much for joining us. Now, unlike elsewhere, we're seeing that Chinese inflation is coming down, which is why also the policies from the central bank are so widely different to the Fed, the ECB, and everyone else. What does this mean for the Chinese economy?
One of the problems that China's economy had last year was just the really high producer prices we saw, especially in the second half. Coal prices, iron ore prices, oil prices, gas prices. The things that the other nations are struggling with, China was also struggling with, and those are really hurting smaller companies and downstream companies. So you saw big profits in the mining sector, and then you saw a lot of losses in the companies that have to actually use the coal that's being mined or that's being purchased from overseas. So this falling PPI or the slowing down of PPI that we're seeing now is good news for the industrial sector, which is going to obviously we'll see lower costs. And also, the slowdown in CPI inflation is really good news for households. Most of that, all of that slowdown in CPI is coming from food prices, which are continuing to fall. So that's obviously good for household spending, which has been one of the weak sides of the Chinese economic recovery.
James, I mean, I find this incredible, actually, that, they're living this so differently to the rest of the world. I mean, can we talk about decoupling, or does it change? I know for investors and traders, of course, changes how you can play this in terms of differentials, but does China not import, some inflation from elsewhere?
Obviously, it imports a commodity price inflation. So right now, with oil prices rising, that's a big concern for the economy. But it is reasonably self-sufficient. I mean, it's very self-sufficient in coal. It only imports a very small amount of its total coal purchase. Oil and gas are a little bit different. But the inflation you're seeing in manufactured goods overseas in other countries is not something that's transmitting through to China because they don't really import a lot of those things. So commodity prices, yes, as those go up, wheat, other foodstuffs, yes, that will transmit through to the Chinese economy, but nothing else is really going to matter because they're not really importing those goods.
James, talk to me a little bit about this no-COVID policy. We also heard from President Xi, we understand that President Xi had told authorities in Hong Kong to do whatever is necessary to keep this under control. What does that mean?
I think that message from President Xi is partly a message to the government of Guangdong, which is the province next to Hong Kong. And it's basically telling the government of Guangdong to pull out all the stops to help the people of Hong Kong. There's no sign that the government in China is going to relent on the COVID-0 policy this year and even into next year. And as Hong Kong is a part of China, there's no sign that the government in Beijing is going to allow Hong Kong to relent on that. But they do need to do more to help the government of Hong Kong to deal with the problem they're facing there. There's a shortage of hospital beds. There's a shortage of, if they have to do lockdowns, there'll be a shortage of food supplies, ways to get food to people. The Hong Kong government, is a laissez-faire, low-taxing, low-service government, and it doesn't really have the resources to be able to deal with all of the problems that it's suddenly facing. So it really needs the mainland governments in Guangdong and other provinces and the central government to step up support. So I think what President Xi was saying is that no change on the policy of COVID-0, but also other people in China need to step up and help, the special administrative region of Hong Kong.
James, I know there's, our Bloomberg Economics studying some provinces in China said, think that actually China will set that growth rate of around 5.5%. If that's what they end up doing, how difficult will that be to achieve?
That would be very difficult to achieve, I think, this year. You're looking at income hit from the slowdown. Then as the industry came back, consumption since the start of the pandemic. First it was consumers took an income hit from the slowdown. Then as the industry came back, consumption didn't really come back because all of the COVID restrictions that China has stopped people going to restaurants, has stopped people traveling, has stopped people going on tourism. So domestic spending has really been really weak. There's no change to that forecast this year, as I said. So those restrictions are still going to hit domestic spending. Then you have this housing market slowdown, like people aren't spending on apartments. They're not buying, and if you're not buying an apartment, you're not fitting out an apartment. So you're not buying curtains and furniture. So the demand from the housing sector is also slowing down. These are all problems that the government is facing, and these are not going away. And if anything, the housing sector problems seem to be getting worse. So I think while the industrial sector again is going to do pretty well this year, just relying on that one engine may not be enough to get it to 5%.
James, thanks so much. James Mager there in Beijing. Now, this is the picture for the cross markets. Now, we also have a great chart actually looking at P in China, but stocks rising, traders weighing the prospect of less tension over Ukraine, but the impact of rising inflation on central bank policies. This is Bloomberg.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
They will keep our accommodative monetary policy flexible for key areas and weak links in the economy.
The fact that we are now hearing that some troops are being withdrawn is definitely a good sign.
We are ready to respond decisively to Russian attack on Ukraine, which is still very much a possibility.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Now, President Biden says the U.S. has not verified a pullback of Russian troops, but the prospect of reduced tensions over Ukraine boosts stocks. UK inflation comes in slightly hotter than expected, while the Bank of England feels a heat in the lead-up to its next meeting, and Xi Jinping tells Hong Kong to take all steps necessary to stop the city's Omicron wave, just a day after Carrie Lam says there are no plans for a citywide lockdown. Now, onto the markets, because they're still pretty interesting. Maybe not as interesting in the last couple of days because of the huge volatility, but we look at some of the liquidity being pumped in by central banks, and this is a picture for European stocks. So they're getting some 0.5%, 0.4% higher, and I have to say a lot of the focus will be on the U.S. 10-year yield. In the meantime, Italy holding strong, 1.975. We did have Mr. Villeroy de Gallo of the Banque de France talking about some of the stimulus being put out, but also some of the bond purchases being reduced before there's any kind of hike. So that was interesting, and again, it's all about sequencing. We need to really pin down Christine Lagarde on that. Now, the European stock 600 gaining some 0.4%, supported by most stocks or most industry groups. What's happening with oil is the interesting one. WTI holding to $92 a barrel, and of course the Brent at 94.4. Look, the main focus is really we see other parts of global markets flashing ongoing nervousness. So I know we'll have a good chart. This is it on Shanghai Valuations. The other chart that we need to point to is VIX. Volatility gauges for both the S&P 500 and Treasury markets are sitting significantly above that 12-month moving average. So again, stocks elevated, supported by some of the easing tensions in Ukraine, but it doesn't mean that traders think it's over for the moment. Now, the Shanghai Valuation chart, this is a little bit different to what we usually do, but it's a good indication given the amount of news that we had from PBOC and from China. I also saw a great Bloomberg economics article saying that they expect that target for growth in China to be around 5.5%. We just heard from our James Maker that will be difficult to achieve. This is a Shanghai Composite forward PE ratio. I found this on our Bloomberg Live blog, and a lot of investors say it's just too soon to call the bottom for some of these fragile stock markets. But if you look at softening multiples, they may lure back some investors. So if you look at Shanghai, it is actually 11 times, what we're seeing. But that PE ratio, if you look at Shenzhen, for example, it's 18 times. So maybe that's a way of playing it. Now, President Biden says that a Russian attack on Ukraine is still very much a possibility. This comes as the NATO defense ministers are due to meet today in Brussels to discuss the crisis. Now, world leaders reacted cautiously to a Russian statement that the Kremlin is beginning to pull back troops from the Ukrainian border.
Concerning whether we want it or not, of course not. We didn't receive a substantial constructive response on proposals made by us.
The fact that we are now hearing that some troops are being withdrawn is definitely a good sign. We hope that more will follow.
The United States is prepared no matter what happens.
So far, we have not seen any de-escalation on the ground, not seen any signs of reduced Russian military presence on the borders of Ukraine.
Mixed signals, I think, at the moment, and all the more reason, therefore, for us to remain very tough and very united.
And we are ready to respond decisively to Russian attack on Ukraine, which is still very much a possibility.
Well, joining us now from Brussels is Bloomberg's European correspondent, Maria Tadeo. Maria, thank you for joining us. So Putin points to de-escalation, the West looking for proof. Where do we go next?
Yeah,
Yes, Francine, and that is very much going to be the focus of this NATO meeting that is happening today with all the NATO defense ministers. And this is what we hear behind the scenes this morning throughout, this idea that it is great that Vladimir Putin says he's pulling back troops, but in reality what we have is a video that's filmed and released by the Russian Defense Ministry, no independent confirmation of it and no verification. So what they say is we'll believe it when we see it. And then also, Francine, and this just happening in Brussels this morning too, we have the head of the European Commission saying that Gazprom is not credible anymore when it comes to its supplies to Europe, and is suggesting that the European Union is looking for other partners when it comes to the LNG market. So again, this is the energy story, but the two very much connected this morning.
Maria, thank you so much. Our correspondent there, Maria Tadeo, and then later in the program we'll also have an exclusive conversation with the Estonian defense minister, so stay tuned for that. Of course, they're a NATO country and extremely attuned, extremely sensitive to everything that's going on with Russia and Ukraine. Now, joining us to assess portfolio positioning is Annika Trejan, head of Van Lost Kempen's Competence Center. Annika, thank you so much for joining us. Of course, a lot of the focus is on some of this positioning that we're seeing around Russia, Ukraine, about the inflation. So what's your main base for what investors should be focused on? Is it the positive or the negatives?
Yeah, I mean, to your point, there's a lot of reasons and a lot of fuel for this very high level of trepidation in the markets. And I think, Russia, Ukraine is sort of the tip of the iceberg. This sort of unease in Eastern Europe has been building up over the last 2 months. However, stock markets have unfortunately grown accustomed to dealing with geopolitical situations. The point is, it's coming on top of the fact that from a central bank, from a monetary policy perspective, there's a huge amount of uncertainty. And what you see, especially from Powell, especially in the Fed, that Powell is making no effort whatsoever to reduce the possibility of outcomes in terms of how this hawkish path is going to continue. So in this very uncertain environment, what you see, you notice investors, they are building up cash positions. Usually in such a nervous environment, you would see people flocking into the treasuries. However, this time round, that is more complex, given the easing of the balance sheets, which we can expect to see.
Yeah, and actually volatility remains quite elevated if you look at a longer-term 12-month moving average, Annika. So I don't know if there's a hedge given all the inflation out there, but is there a natural haven or a natural portfolio building that you would look at doing to hedge yourself?
Yeah, so the point is it becomes a lot more work. We have to work a lot harder as investors and as asset allocators. And, the famous Fed put, I mean, clearly central bankers, not only in the Fed, but the central bankers are working very hard to wean markets off that. Now, what is the consequence from a portfolio allocation perspective is simply laying back and buying an index and riding on hopeful sort of index returns, maybe even multiple revaluations. That's no longer viable. It means getting much more nitty-gritty. Within the equity space, you do still have the opportunity to be exposed to very high-quality businesses, which have the pricing power to offset inflation. Real assets is another fascinating area with natural indexation.
Annika, let me just cut you off because we're hearing from Mr. Stoltenberg of NATO. He's talking live right there in front of NATO headquarters. I don't know whether he's speaking in English and whether we should go to it, but what he's saying is that he's not seeing any Russian de-escalation on the ground. Should we listen in if we can get to him to see exactly, and weigh his words?
Message of real diplomatic efforts. So it remains to be seen whether there is a Russian withdrawal. We are, of course, monitoring very closely what Russia does in and around Ukraine. What we see is that they have increased the number of troops and more troops are on their way. So far, no de-escalation, but of course we hear also the messages about diplomacy, and we are ready to engage in diplomatic efforts with Russia. Let me just add that this ministerial will of course focus on the critical security situation in Europe, but we will also have other meetings. We will meet with our partners from Ukraine and Georgia, and again that will be a platform to address the importance of sovereignty, territorial integrity of all countries in Europe, including Georgia and Ukraine. We'll meet with our close partners, Sweden, Finland, and the European Union. And I've also today...
All right, that's Secretary General of NATO, Mr. Stoltenberg, again reiterating that they have not seen any Russian de-escalation on the ground, and actually was also saying that he sees more troops going to the borders. So this is a different message to what we heard from Russia yesterday. We'll dig deeper. We'll see whether we have an intelligence report also from the U.S. Usually they're right on the money to try and understand exactly what's going on the ground. We're back with Annika Treon, head of Van Lost Kempen's Competence Center. And Annika, I guess this is a concern when it comes to geopolitics. You're not quite sure what you're looking at, who you're believing, and exactly what it means to, going forward. Does it mean that, for example, some of the things that are, very specific to this geopolitical concern, which is Russian ruble, which is certain Russian assets, Ukrainian assets, but also palladium, wheat, and things that could be impacted directly if there was an invasion, what do you do with them right now?
Yeah, it's a fragile environment, and the more direct exposure will certainly be areas of larger caution. And to your point, we've just heard, a pivot from de-escalation to actually there might not be de-escalation. And to what we were discussing earlier, really understanding the nitty-gritties of the specifics of the securities that you're exposed to is more important now than it's been ever before. And that's why, investing in this climate with this huge trepidation out there, not only because of Russia, Ukraine, but also because of this final easing of QE, this easing of the era of sort of free money. It's more work. It's harder work. So it's indeed about really deep diving into businesses, into their cash flows, whether it's on the equity or the debt side, where there are exposure areas where one would need to be cautious about.
Okay, Annika, thanks so much. Annika Treon, they're head of Van Lost Kempen's Competence Center. At the same time, we're seeing a bit of a reversal when it comes to these European stocks. They're gaining, but only 0.1%. The FTSE is actually now seeing a reversal. This is on the back of those headlines that we heard from Mr. Stoltenberg of the NATO, really urging caution. I know he says he's cautiously optimistic about some of the things that we heard from Russia, but he's also told everyone that they have not seen any Russian de-escalation on the ground. In fact, he's seen more troops being moved at the border. So you can see the CAC 40, gaining, but only 0.1%, and that's a similar, of course, a move across the board. We'll also have a pre-market check for roadblocks tumbling as some of the results show that growth is slowing after that pandemic. Now, coming up, UK inflation unexpectedly accelerates in January, adding pressure for big BOE rate hikes. We'll look at the numbers next. This is Bloomberg.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's, individual circumstance and, decisions.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now we're looking at live pictures outside NATO headquarters, where also Maria Tadeo is, of course, stationed. We were just listening to Mr. Stoltenberg of NATO saying that, Russia provides some ground for cautious optimism. Let's listen in.
At least stated that they're ready for a diplomatic solution.
Thank you very much. We'll see you later.
Thank you.
Tonight.
All right, we just caught the end of that. Of course, Mr. Stoltenberg saying that they have not seen any concrete, any concrete movements of troops getting out of the border. I think he's also said, if I'm not mistaken, that there were more troops that were actually amassed there. Now let's bring back Annika Trejon, head of Van Lost Kempen's Competence Center. Annika, what does it mean for some of the havens that we should be buying? I know there was a big move on dollar-yen. I don't know whether you look at Swiss franc or you just buy gold.
Yeah, well, I mean, the classic haven in this environment is to just pile up in U.S. treasuries, because that would typically feel like the safest place to be. And I think what makes it complicated this time is that with central banks easing from a balance sheet perspective, let's put this into context. The Fed was buying approximately $200 billion of treasuries of bonds on a monthly basis. Now, as that buyer starts fading away, as these asset classes are, of course, dictated by supply demand, you've got to argue, well, where is that incremental buying power going to come from? I.e., do we want to be exposed to that area at this point, yes or no? Right. And that's indeed why you see a lot of investors starting to pile up in cash at this moment in time.
All right, thanks so much, Annika Trejon there, head of Van Lost Kempen's Competence Center. Now, let's go back to NATO headquarters. Again, just minutes ago, we heard from Secretary General, Mr. Stoltenberg, that Russia retains a possibility to invade. So they have not seen any Russian de-escalation on the ground. Let's also get over to Bloomberg's Maria Tadeo at NATO headquarters with the defense minister that's very close to Ukraine, one of the NATO countries. Maria, over to you.
Indeed. We're joined now by Estonia's defense minister, Mr. Kalle Laanet. Thank you so much for joining us on a meeting that I know you were telling me off camera today is very important, especially in the context of what's happening in Ukraine. Now, the Russians say they're pulling back. The obvious question to you is, do you believe Vladimir Putin, or is this another bluff from the Russian president? Excuse me.
Good morning, everybody. Of course, it's a quite important sentence. We have to see with our own eyes what's happening, not just listen what's happening, because it's always or mostly disinformation.
So you're worried this video that they're showing of the tanks moving away is fake news? It's a trap?
Absolutely.
And how can you verify this? Because we just heard from Mr. Stoltenberg, the Secretary General, saying we have to be able to independently prove this. How can you do it? This is happening in Russian soil.
Of course, today, if we are living on cyber society, it's more or less we can control everything. And who controls cyber society all over Russia and all over the world? Then these intelligence services know most of them. And I 100% sure that Russians know what we know, and we know what Russians would like to do.
So there's a way where you're saying is that our intelligence service will know whether this is true or not in the next few days.
Exactly.
And when Vladimir Putin told Olaf Scholz yesterday, the German chancellor, I don't want war in Europe, do you trust that as being sincere?
Once more, don't believe what they are saying, believe what you can see.
And what about the Ukrainians? I know that you feel a very strong attachment with them. You're a country that's closely connected, of course, geographically with Russia, but also Ukraine. You do feel that the pressure is unfair on the country. There's a very real risk of war. I wonder, in your conversations with your Ukrainian counterparts, how much do they worry about this attack?
Of course, they are worried about the situation, and we are sharing information daily basis, and we are with them with the happiness of Ukrainian people and also with the problems, and the Estonians help daily basis them with certain trainings, also with let's say field hospital with the German state also, and we are together, and because at the moment Ukraine is the front line of that battle.
And when you say we're always helping them, I'm sure you refer to the soldiers that you have doing training. Do you foresee that your country, Estonia, will provide either medical, weapons, or more men on the ground to help Ukraine if it was needed in the short term?
Absolutely. We already decided to send certain weapons to Ukraine, also medical help, and we are doing that.
And do you have a number for it? How much more would you be willing to send? How many more people, perhaps, send their troops particularly for training?
These numbers are not available publicly. This is between two states, this information.
And when you look at NATO, we have seen this huge presence, particularly in the Baltics and countries like yours, but also Latvia, Lithuania, and so on. Is this something that is going to be permanent now? Even if we do see tensions de-escalate, you're going to see a major deployment now as a lesson learned from what's happening right now?
From the deterrence point, EFP is so important, and as we know already that British soldiers are doubled on Estonian soil, and also we are discussing maybe more and more our allies are sending troops to Estonia and to the other Baltic states, and on the point of deterrence, this is the main thing.
And what do you respond when the Russians say, but you are creating a problem? When Estonia and other Baltic countries send more troops, and it means we also have to deploy more troops, pull them back.
Estonia and NATO never attacked no one country. Russian attacked.
But when Vladimir Putin said yesterday, but Yugoslavia, he keeps bringing that reference, was bombed. I wonder, do they have a point at what point in which you can negotiate?
Which country attacked 2008? Georgia. Which country attacked Ukraine 2014? We all know Russia.
And right now, of course, going back not just on the military, but the political front, there's a big conversation about Minsk and whether or not this is the way forward. But we also see the Russians putting a motion saying recognize Eastern Ukraine as being part of Russia. How much do you worry about that? Because politically, this could really destabilize Ukraine further.
Absolutely. And if we are looking, for example, to the Belarus as a whole, they are already more or less part of Russia.
Is Lukashenko's Putin's puppet here?
Yes.
Politely?
Yeah.
But do you believe when he says we're not going to be doing any more drillings with the Russians? This is over in Belarus?
Yes, if we can see how many troops are, for example, right now for exercising in Belarus, and I am quite sure that most of them are staying after the exercises there. And we can't say this is a so-called exercise.
And there's been a lot of speculation in the past 24 hours that perhaps the best way forward is for Ukraine to just accept we're not going to be joining NATO in the short, medium terms. That's something that I guess we can all recognize. Ukraine won't be joining in the next 5 to 10 years, but just put it away. It's the best way to de-escalate. Would you agree with that? Or does it set a dangerous precedent?
This is a very dangerous precedent at first. Every state has to decide himself where they would like to move, to the eastern side or the western side, and no one state can say that you have to move on that direction. This is a freedom to choose. It's the same with Finland, with Sweden also, Georgia.
And some say that a lot of this, just as a final question, is Vladimir Putin looking to the glory of the Soviet Union and the USSR. Again, you know your history of their country. What would your message be? Is the Soviet Union dead? Everyone has to come to terms with that? Let's move forward.
Soviet Union is dead already.
And not coming back, I guess.
Not coming back.
Well, Minister, thank you so much for your time. It's always a pleasure on a very important day, of course, as NATO ministers meet here in Brussels. Francine?
All right, Maria, thanks so much. I'm here today there with the Estonian Defense Minister, Kalle Laanet. A bit tight-lipped, but, obviously making his point very clear that we need to be careful. We need to verify and make sure that the troops are out of the border and not trust, in his mind, Vladimir Putin at face value. Now, this briefly moved stocks, certainly when we heard from Secretary General of NATO, Mr. Stoltenberg, saying that he had not been able to verify any troop movements. He also mentioned that there had been more troops than yesterday and that nothing had been pulled out. Stocks still on the rise after a bit of a wobble. Traders again weighing the prospect of possible diminishing tensions, although I would put a question mark now towards it after the two lost gentlemen speaking to us on Bloomberg and the impact of rising inflation on central bank policies. Now, miners, energy companies leading the second day of gains. They bounced off a 3-week low on Tuesday. This is all about geopolitics. It could come back to haunt us. Investors also continuing to evaluate escalating costs and the likelihood of tightening monetary policies in places like the U.S. and the U.K. Now, U.K. inflation unexpectedly accelerated for a 4th straight month in January. piling pressure on the BOE to deliver an aggressive interest rate increase next month. Joining us now is Bloomberg's UK economy reporter, Lizzie Burden. Lizzie, thank you so much for joining us. I mean, this inflation number was pretty extraordinary, actually. What's behind it? What drove inflation?
Yeah, it's a new 30-year high again, and we didn't even expect inflation to accelerate in January. It's because of clothing and footwear price rises. That's because the discounts in the January sales were smaller than at any time since 2005. Retailers trying to claw back their losses. Again, you had energy price rises and second-hand car price rises. Same story as previous months, somewhat offset by restaurants and hotels and transport. But this piles pressure, as you say, on the Bank of England to go big in March. And if they go for 50 basis points of hikes, it'll be the first time in their independent history.
I mean, I guess the question is, will they want to be so aggressive up front, or do they want to play it out, which is what the Bank of England governor was telling us a couple of weeks ago?
He's always saying that, and it's true, there's a lag in monetary policy. It takes 12 to 18 months for it to have an effect. So if they front load the hikes, they can send that strong signal, maybe shock markets, although much of this is priced in, and try to get inflation expectations anchored, which is clearly, presumably, what Andrew Bailey was trying to do when he called for wage restraint in wage bargaining.
Lizzie, thanks so much. Lizzie Burden there, our UK reporter. Now, coming up, will a hawkish Fed hurt emerging markets? We'll be joined by Societe Generale's global head of EM research, Phoenix Callan, who remains positive on the prospects for EM. That's coming up shortly. Again, stocks rising, traders weighing the prospect of diminishing tensions over Ukraine, although we've heard from NATO saying they haven't seen those troops leave the border yet. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
President Biden says the U.S. hasn't verified a pullback of Russian troops, while NATO Secretary General Jens Stoltenberg agrees with the U.S. president. UK inflation comes in slightly hotter than expected, while the Bank of England feels a heat in the lead-up to its next meeting. And President Xi of China tells Hong Kong to take all steps necessary to stop the city's Omicron wave, just a day after Carrie Lam says there are no plans for a citywide lockdown. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, we did have quite a lot of news actually out of NATO. Again, this is something that President Biden said yesterday. Yes, there is a very clear move in terms of markets, stocks rising, traders weighing the prospect of diminishing tensions over Ukraine. But I would put a question mark to that, because yesterday Russia was promising troop movements, pulling troops out of some of the military drills that they had done in Belarus and, of course, at the borders of Ukraine, and put them back at base. So we heard from the U.S., we heard from NATO. They have not been able to verify this. Mr. Stoltenberg of NATO actually saying that he sees more troops on those borders. So that's what traders could be worrying about. And at the same time, they need to impact or measure the impact of rising inflation on central bank policy. So it's really geopolitics and a tightening world when it comes to monetary policy that traders need to figure out. Also, Republicans on the Senate Banking Committee have blocked votes on President Joe Biden's 5 picks for the Federal Reserve. Now, the move was part of a dispute over Sarah Bloom Raskin's nomination for vice chair for supervision. The standoff has no quick resolution in sight, leaving Biden's Fed picks in limbo, potentially into next month. Now, we're joined to talk about all of this, to talk about the markets, and of course some of the moves we're seeing in fixed income by Ven Ram from our markets team, and Phoenix Callan, Global Head of Emerging Market Research at Societe Generale. So thank you both for joining us. Ven, first to you. I don't know what it means. You know, traders, I know, are playing this inflation play. You've had some great calls on treasuries, but at the same time, they're really trying to figure all this geopolitical uncertainty. So what happens next to treasuries?
Well, I do think that, you know, what we've seen from Treasury so far is that they seem to be less concerned about these geopolitical tensions because they are kind of difficult to price. As BlackRock, as someone from BlackRock mentioned on your show earlier this week, those are extremely difficult to price, and the markets and Treasury markets seem to be less worried about it than European markets, and rightly so, because Europe is going to be more affected. Where does that leave us with Fed pricing? I do think that Treasury yields are still northbound. We haven't seen the peak of the sell-off, I don't think, especially at the front end. If the Fed is going to go 100 basis points by the end of June, as Bullard has flagged, I do think that there is still more upside to 2-year Treasury yields. The 10-year will take its cue from the pace of tightening and of what happens to inflation, plus the all-important, how are they going to manage the balance sheet runoff?
Interesting. Phoenix, I guess the question is, you know, we heard from James Bullard, and it's very clear that he's trying to now justify that his call for front-loading the rate hikes is not a threat to the economy or to the stock market. But what does that mean for emerging markets overall?
Yeah, I think one of the things that we have to acknowledge is that emerging markets has actually been very prepared for this normalization cycle out of the U.S. We've seen those hundreds of basis points on average of rate hikes in EM last year. And we've seen, of course, the sharp rebound in real rates, in terms of real policy rates in EM versus the U.S. compared to kind of the taper tantrum episode. So right now, real policy rates in EM are about 400 basis points higher than in the U.S. Back then, in 2013, they were about 260 basis points higher. So in that sense, we are a bit more prepared on the policy rates front. Central bankers have been much more proactive in engaging with financial stability risks. And so we think that EM currencies, in particular, are likely to be much more resilient this time around in the face of Fed normalization, now with 6 or 7 25 basis point hikes priced in already by year end.
Yeah. Vin, I mean, going back to some of the things that is priced in the markets, I mean, if we have a full percentage point interest rate by the Fed by July, again, could we see the yield on the 10-year run to 3%?
I think 3% is a bit too steep on the 10-year. I think that 2.25 is doable, but beyond that, it'll certainly come down to the Fed's balance sheet runoff. I don't think more than the hikes, because if you look at the terminal rate that's priced in with by the market, the 10-year yield is kind of running alongside that, and it's not really pulling up beyond that And that's because the Fed is holding a lot of treasuries, way more treasuries than it needs to. And that needs to roll off for the 10-year and the longer yield to unlock and push higher, which is why we have seen that in this current cycle, there's been a lot more flattening than you would expect. And I would expect that to continue. And therefore, I see the 10-year going to 225. Beyond that, it'll come down to what the Fed signals on its balance sheet.
Phoenix, in terms of markets that you cover, if you see a yield, a 10-year yield at 2.25 or even 2.5, who's most vulnerable to that shift?
Yeah, so I think for us, it's still going to be the regions where inflation pressures are building. So that's CEE and that's LATAM. And there we do still expect for rates to normalize higher over the course of this year. So even though on average, for instance, we would expect for there to be a 35 basis point increase in 10-year bond yields, much of that increase is going to be concentrated in LATAM and in EMEA, where the average in terms of bond yield levels increases might be well over 100, so 130 basis points out of CEE, for instance, 150 basis points out of LATAM.
Ven, what's the other, there's so much going on in today's market because there's the UK inflation numbers, so you have the interplay between also what we heard from PBOC. Are you worried about a shock coming from anywhere in terms of policy, monetary policy?
I think I would see more of a shock coming from the inflation side of things, because in the UK, we've seen RPA approaching 8% today, and that's pretty disturbing. And the markets are pricing in 1+ rate hikes. They're not 1+ 25 basis point rate hike in March. They're not fully seeing 50 basis point increase yet. And I think the risk is that we may see inflation expectations becoming unanchored completely in the US and the UK. That's a far bigger risk to the economy in the long run. Of course, you've got crude prices also approaching $100 a barrel. So if you pull all those together, what you see is an economy that can be upset by this inflation shock more than any policy shock at this point, I would say.
All right, Ven, thank you so much. Ven Ram there from Bloomberg's markets team with some great calls. And Phoenix Callan, Global Head of Emerging Market Research at Societe Generale, stays with us. We'll talk a lot more, of course, about the Kremlin. We'll talk a lot more about what we heard just now from the NATO Secretary General, saying they're not seeing any troop movements. The Kremlin currently saying that NATO claims that there are no Russian troop pullback are wrong. So we're going for the diplomatic route, but also barbed wires between the two sides. The Kremlin saying that Russia is tired of hearing threats from the U.S. and allies. Of course, this is a direct message to what we just heard from Mr. Stoltenberg. Coming up, how China's 1.4 billion shoppers went from an untapped gold mine for Western brands to a growing headache. More on that story next in today's Big Take. This is Bloomberg.
crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Economics, finance, politics. This is Bloomberg Surveillance. Apologies. Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, China's 1.4 billion consumers were once seen as an untapped gold mine for Western brands, with their rising incomes expected to drive growth for companies from Nike to Nestle. Now, they're becoming a growing headache as some Chinese shoppers act more and more like an extension of Beijing's political agenda. While sales of some Western brands have plummeted in the past 12 months as Chinese consumers increasingly show their patriotism by buying local labels instead. Now, for more on today's Big Take, we're joined by our consumer reporter, Xingshan Hong in Hong Kong. Xingshan, this is a great story. So first of all, congratulations for really putting this together. But how is rising nationalism causing actually the shift in consumer behavior?
So actually, we have this exclusive data looking back 4 years of transactional e-commerce platforms in China. And what we learned from it is that a lot of boycotts we have seen the past year, like the March 2021 boycotts against Western brands denouncing the use of Xinjiang cotton, were also actually a situation that actually hurts their performance in the longer term, which we see continuously until 2022. So that's a thing that a lot of analysts didn't anticipate it at the beginning of the crisis, and we are going to continue to see the impact going forward.
So is it just sports, or what about the other products?
Yeah, so actually we look at a lot of different categories. We feature sportswear in the center of the story because they have the most interesting development. Because in the past, Nike and Adidas dominated the sphere for more than 3 years, and suddenly Xinjiang cotton crisis happened, and they are surpassed by Chinese brands like Anta and Li-Ning, which also provide better products nowadays and better marketing targeting Chinese consumers. And on the other hand, we look at categories such as the cosmetics industry. We also look at baby food, soft drinks, and apparel. And we see the same trend across the board that actually more and more consumers are choosing national brands. So that's actually a very interesting phenomenon that we observe, and we didn't actually fully anticipate it at the beginning of our project.
Xingshan, I have to say, I'm absolutely fascinated. Anta Sports, Li-Ning, these are some of the Chinese rivals to some of the Western brands. I don't know whether there's scope for them to also come to Europe. There's a lot of brands that are made in China that sell to billions of consumers that actually we don't have here. Could they expand elsewhere?
Yeah, actually, that's a very good question because, for example, like Anta, before the pandemic started, they bought a lot of foreign brands like Amer so that they can enter other markets. However, pandemic definitely disrupted their plan, and they are looking to expand into the international market when China can reconnect with the world when COVID wanes. And on the other hand, we also see a lot of small companies that are just like a few years old abruptly rising to the top of the consumer industry here, and they also have the potential of entering into the wider market. But of course, will they succeed will be a longer question to look.
Yeah. It's a great story. So I urge everyone to go and see it. I'll push it out also on social media. And there's a picture of a good-looking Nike Kiri 8 with the Chinese logo. On Hong Kong, the city's leader, Carrie Lam, only this week said that there were no plans for a citywide lockdown, even as she acknowledged that a growing Omicron outbreak has exceeded its capacity to respond.
As far as Hong Kong is concerned, we need to find our own way out of this epidemic. I will have to say it very clearly that we have no plans for any widespread city lockdown as you have seen in some of the other places.
But today's Xi Jinping has told Hong Kong to take all necessary steps to contain the Omicron wave. So what exactly is the situation on the ground, Li-Ning?
Is that Hong Kong should do everything to stop this outbreak, and that's a mission that overrides everything else. So that's a very strong message because we rarely see President Xi give such a direct message to local outbreaks ever since Wuhan, that was at the very beginning of the pandemic. So it's a strong message to Hong Kong that it needs to stay with its COVID-0 policy. It's also something that suggests the Hong Kong government might need to do more and consider measures that are necessary, as what Xi Jinping said.
All right, thank you so much. Our wonderful Bloomberg consumer reporter, Xingshang Hong, there joining us. And I urge everyone to go and read our big take today. It's very different, it's very smart, and it gives you insights that you can't get anywhere else. So you can find it online or on your Bloomberg terminal. Just go to NI Big Take. Now, eyes, of course, on China to see how officials are going to navigate their slowing economy. And the latest inflation data shows that consumer and producer prices eased more than expected in January. Speaking at a G20 panel earlier, People's Bank of China Governor He Gang said the central bank stands ready to support the economy.
We will keep our accommodative monetary policy flexible and appropriate, and increase support for key areas and weak links in the economy.
Let's get back to Phoenix Callan, Global Head of Emerging Market Research at Societe Generale. First of all, Phoenix, how should we look at China through the lens of inflation, but also the fact that the rest of the world is tightening, whereas the PBOC doesn't have an inflation problem and they need to loosen monetary policy?
Yeah, indeed. And from the kind of analyses that we've looked at, Asia is the one region in the world that's not really plagued by huge amounts of surging inflation pressures. And we have seen that negative surprise from the China inflation data earlier today. And even though that decline was mainly driven by food and energy inflation, and that's somewhat associated with base effects, the core message there is still, core consumer prices are remaining weak, and they're reflecting really lackluster consumer demand and also falling housing inflation. So we think that in combination with the moderation in PPI, as the coal price pressures are now receding, that does indicate that there's more room for the PBOC and engage in easing measures in this first half of the year.
Phoenix, what does it mean for, I don't know whether we have a concrete target. I know our Bloomberg Economics has a great piece by looking especially at the region, because we talk about China as a country, but it's so huge and vast, and of course the economies are so different from region to region. They would target a 5.5% growth. I don't know whether that's also a calculation, and if it is 5.5%, how difficult that would be to achieve.
Yeah, so for us, we do think that is going to be quite a challenge, considering that now policymakers will have to lay out lots of concrete measures for targeted kind of measures of stimulus around infrastructure, around consumer stimulus and tax cuts. But overall, we think that it's more realistic for China to achieve a 4.8% GDP growth this year. We don't think that kind of range that's likely to be targeted at the NPC later this year, that range around 5 to 5.5% is going to be easy to achieve, especially given the Omicron spread and also given the very slow inclination of China to pivot away from its zero tolerance approach.
Yeah, Phoenix, do you think they'll stick with the zero tolerance approach?
So we do think that will remain in place for most of the year. There have been some recent indications around, China recognizing some of the Pfizer treatments, and they've always made clear that for them to pivot away from zero tolerance includes having really effective treatments for their population, and the demographics of their population is much more in terms of having a higher population of elderly people who might be vulnerable to the disease. And so for them, it's quite important to have really effective vaccines and treatments. And it does seem like they are indicating a shift toward more acceptance of Western treatments. And so I think that does open the door for them to pivot away from zero tolerance later this year.
Great. Thanks so much. Phoenix Callan, Global Head of Emerging Market Research at Societe Generale, joining us this morning. Now let's get straight to a Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Roblox shares have tumbled more than 15% in after-hours trading after it reported bookings that missed estimates in the fourth quarter, reflecting a retreat from the pandemic-inspired boost. The game platform company saw much of its growth come from countries in Asia, Latin America and Europe, and in a shift, more than half of Roblox's user base is now over the age of 18. And if you work for Goldman Sachs, don't expect to work from home full-time. The chief executive says an in-person office culture remains an important part of the bank's identity as workers continue to return to the office. David Solomon says the workplace is particularly valuable for the development of employees in their 20s, who make up about half of the firm. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Coming up, the latest on Ukraine, as NATO says they have not seen Russian de-escalation on the ground, something the Kremlin denies. Well, plenty more of that shortly. This is Bloomberg.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, quick market check because stocks are rising. Traders, of course, weighing the prospect of diminishing tensions over Ukraine, but now with question marks over whether they really are diminishing. They also need to weigh the impact of rising inflation on central bank policy. A couple of things, miners and energy companies leading a second day of gains. The gains are muted. And then if you look at exactly what's going on, I have to say, you know, markets are extending this rally, but Western officials are cautious, saying they have yet to verify some of the claims coming from Moscow. So on the Ukraine, we heard from the NATO Secretary General Jens Stoltenberg. That was a very short while ago. And he said they have not seen any Russian de-escalation on the ground in Ukraine. Then we heard from the Kremlin spokesperson, Dmitry Peskov, has been commenting as well, saying that the claims from NATO of no Russian troop pullback were wrong. I think Mr. Lavrov also said he was just fed up with all the scaremongering. Now, let's get straight to our Bloomberg International Government Editor, Rosalind Matheson. Ros, the situation, frankly, is you know, complicated as it's been because there's all these barbed wires. It's like, well, I can't verify it. Well, you know, Russia's saying they're fed up. Like, where are we?
Well, it's also a matter of degrees because it does seem that Russia is pulling some people back. They are pulling some of their troops back in various places. They're saying these exercises they're holding in Crimea have also ended and they've pulled some of their troops back. And there is footage suggesting that that is happening a bit, but the question is how much? Because you can pull back some troops and it's not really a total de-escalation, which is what NATO really wants to see. And beyond the troops, you can move those pretty quickly. There's no evidence they're moving heavy equipment. So what you really need to see is tanks, for example, pulling back, artillery pulling back, and so far there's no evidence of that. And if you're leaving that there, then you're leaving yourself positioned potentially to act.
So does it all depend now on diplomacy? I mean, I guess the good news that also the markets took in their stride is that at least from both sides, they're willing to talk more. Like, what's the next time the two sides meet?
Well, there could be an opportunity at the Munich Security Conference this weekend for officials from Russia and the US to meet and sit down in person. It's possible, of course, that the US Secretary of State, Antony Blinken, goes to that and they can actually talk face-to-face for the first time because, as you say, diplomacy, there's still a big question mark over that. The Russian president says his demands have not been met. They're still there on the table. He still wants them to be addressed. NATO and the West say, well, they can't really meet those core demands that he's asking. So where is the wiggle room still in that? There's been very little progress on that question of where they can find common ground.
So how do they actually verify? I mean, I imagine the neighboring countries also have a direct line of where the things are masked, but does it take a couple of days to move these around?
It certainly could. And interestingly, this is one of those things where you see a lot of people using open source information on the internet. Anyone really can use satellite images to see where stuff is being moved or not moved. So it will be possible to actually verify these demands, whether they're actually following through pretty quickly.
Roz, thank you so much, as always. Roz Matheson, they're our international government editor. Now, coming up, we'll have plenty more, of course, on the markets. We'll follow Ukraine very closely. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller, Haley Lines in New York, our Anna Edwards here in London. This is Bloomberg.
almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
The market is pricing in today what's going to be a transition year for the economy.
Geopolitical risk is one of those things that you really can't get your arms around.
Putin has managed to get everybody's attention in the West, but the results are not all favorable to him.
The Russian leadership seems stuck in this mindset of competition with the West as opposed to cooperation that could actually help Russia improve its economy.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong on this Wednesday, February 16th. Our top stories today. President Biden warns that the danger to Ukraine has not gone away. He says Russian troops are still in a threatening position and is waiting to verify Moscow's claims that some forces have been withdrawn. The UK hasn't seen inflation like this in 3 decades. The latest consumer price data adds to the pressure on the Bank of England to increase rates even faster. And in the US, traders are trying to figure out how fast the Fed will move to raise rates. They may get clues from Fed minutes and retail sales figures. Both are due today. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines up bright and early for us in New York, of course. And Kaylee, the focus very firmly on geopolitics once again, but as we get later in the session, US data and US inflation decisions loom large on the horizon.
Yeah, we get those retail sales at 8:30 a.m. Eastern time. Then the Fed minutes will be coming later on this afternoon. So the market will be looking as to any clues of what the March meeting could potentially bring. Now, of course, ahead of all of that, we do have a risk rally in part due to the semi-easing, it seems, of geopolitical tensions when it comes to Russia and Ukraine. And it really was a green day in Asia overnight. The MSCI Asia Pacific Index was up about 1.5%. Japan, a real leader within that. The Nikkei was up more than 2 percentage points, in part led by chip stocks, following on from the gains we saw for the SOX index here in the States yesterday. Also, the big story out of Asia overnight was Chinese inflation data. Yes, it's still elevated, but it is coming down and actually came in below economists' forecasts. That is taken by the market as a signal that the PBOC can move forward with easing policy because they don't have to worry about combating higher inflation. That is leading to just a fractionally weaker Chinese yuan. 633.78 is where we sit, though that is still around the strongest level for the Chinese currency in about 4 years. Finally, because of that data out of China, it led to a rebound in iron ore prices, down positive for the first day after 3 days of losses. Of course, we saw those big declines yesterday as China took steps toward reining in the rally, but optimism around the easing story in China leading those futures up around 3% to 140 a ton in Singapore.
All right, we had positive risk sentiment for the last hour or so in U.S. futures. They were mostly down overnight, and they've come back down a little bit in the past few minutes. So right now, S&P futures off about 0.2%. The 10-year yield coming down, so investors are buying government debt right now, which says something as we're looking at 7 rate hikes priced in. That means that investors are looking for some safe haven for some reason here. NYMEX crude still up, but just about 0.2% right now, $92.69. Not changing a lot from yesterday after it posted its biggest drop this year. And Bitcoin right now also very little change at $44,067. Anna, what do you see in Europe?
Yeah, well, in keeping, Matt, with what you saw on the US futures picture, European equity markets actually in positive territory for the first couple of hours of the trading day, but just drifting back, drifting downwards as we get into the 3rd hour of trading here for European equity markets, and things looking a little bit more mixed. Certainly some downside coming through on the UK FTSE 100. In terms of the sector breakdown, I pulled out oil prices. Matt, you were talking about WTI. I've got Brent for you, also showing some upside. And this really because one of the sectors that is doing quite well today is energy, also basic resources, chemicals, those sectors moving to the upside. The movement higher in Brent prices, not really because of any big change in the geopolitical story. Yesterday, we saw geopolitical risk being reduced, and therefore oil prices coming to the downside. No real change in that today. But do we see a sort of supportive supply and demand dynamic underneath that geopolitics? And do we see commodities as a good inflation hedge? All of those perhaps lifting or supporting Brent crude as we head through today's session. I've got the pound in here, the pound at 135.62, up 0.2%. It's actually a weak dollar story as well. But we have had that 30-year high once again on inflation numbers out of the UK. And again, that puts pressure on the Bank of England. It wasn't a big beat, just 0.1% above estimates. But it was an addition, if you like, to the pressure already on the Bank of England to act on inflation. I put in here the Polish zloty. We don't talk about this very often. But we've seen the EU winning a court battle against Poland and against Hungary, which means that they can attach some conditionality to the funds that are dished out by Brussels to those Eastern European countries. One Polish minister calling this financial blackmail. Of course, the EU says this is about enforcing the rule of law and attaching, as I say, some conditions to the money. Ericsson is down by 10%. This is the telecom equipment company. Did they pay some money to ISIS, the terrorist organization, to gain access to parts of Iraq? That is a question that the company themselves cannot yet answer. As a result, they are starting an internal probe, and that is weighing on the company today. Kaylee?
Yeah, an analyst today, Anna, saying that report is eroding trust in the company. So we'll continue to keep an eye on those shares throughout the day. Now, as for what else is ahead today, we will get U.S. retail sales data at 8:30 a.m. New York time, a very important read on the consumer that, of course, the Fed is going to have to consider. And speaking of the Fed, we will get the January FOMC minutes at 2 p.m. New York time, looking for any clues on potentially the rate move that they are looking at in March. And finally, the world's most valuable chip maker, NVIDIA, will report fourth quarter earnings. And of course, that's after pulling the plug on its planned acquisition of ARM from SoftBank. Anna?
Yeah, so what does the future hold there? Lots to focus on. Let us turn to the geopolitics then. NATO defense ministers are gathering in Brussels today, kicking off a two-day meeting. Last hour, Secretary General Jens Stoltenberg said NATO has yet to see any signs of a reduced Russian presence along the border with Ukraine.
So far, we have not seen any de-escalation on the ground. On the contrary, it appears that Russia continues the military build-up. We are ready to sit down and discuss with them, but at the same time, we are prepared for the worst.
Bloomberg's European correspondent Maria Tadeo joins us now from NATO's headquarters in Brussels, and our Washington correspondent Anne-Marie Houdin is in D.C. for us. Let's begin with you, Maria, and what we are hearing then from NATO ministers today. It seems NATO, just like we heard from the US, and more on that in a moment, but it seems that NATO is still unconvinced by what Russia is saying that they will do or have done.
Very much, Anna. And when you hear the Secretary General Stoltenberg, he was very clear. We do not see this pullback. If anything, we believe that big military buildup along Ukraine is continuing. So we want to see the proof. Now, when you look at the market reaction, particularly yesterday, Anna, there was a lot of relief into this idea that these drills that are happening alongside Ukraine, but also in Belarus, were coming to an end, and some of the troops were being sent back to base. But I have to tell you, the officials that I've spoken with behind the scenes, also on the record today, they all tell me they are much more hesitant about it. They say that Russia has done this many times, and this is misinformation, that right now all we have is a video that was filmed and released by the Russians. Some argue perhaps this video could or may well easily be a fake video, and this is not actually the reality on the ground. So a lot of skepticism this morning here in NATO. And I spoke in particular with the Estonian defense minister, and he told me, we know in the Baltics very well how the Russians operate. We know the tactics. Sometimes they pull back troops, but they keep the military equipment on the ground, and that is very dangerous because it means in 2-3 weeks' time they could send the men back, and then we're back to square one. So a lot of hesitancy today here at NATO.
Adding to these tensions, Maria, we hear that the Chinese now may take advantage of Ukraine tensions and try to, quote, do something in the Indo-Pacific region. This according to the U.S. Commander of Pacific Air Forces General Kenneth S. Wilsbach. He said Beijing may try to provoke the international community. What do we know about that?
Well, you know, and it really matches what I've heard here at NATO too, and what we heard on the record, by the way, from the NATO Secretary General, saying that at this point, Russia and China are working together. They are described as two authoritarian countries that do not believe in the rules-based democracy and that are going after, of course, smaller countries. When you look at those smaller countries, well, it's a very clear reference to Ukraine, but also Taiwan. When you look at the military operations that they're doing, well, when Vladimir Putin went to China last week, he said that he sees a partnership with China that has no limits.
All right, Bloomberg's Maria Tadeo in Brussels. Thank you so much. Now let's head over to Washington. President Biden says the threat to Ukraine has not ended, even after Putin's overtures for more diplomacy. Anne-Marie Hordern is with us from D.C. Anne-Marie, the Biden administration doesn't seem to really be buying it.
No, certainly not. And really striking a similar tone to what you're hearing from Maria and Jens Stoltenberg over at NATO is that while Biden yesterday giving his speech, the president said that it would be a good thing and what the Russian Defense Ministry is saying in terms of pulling back troops. But he says, we have not verified that yet. And even went far enough, Kaylee, and actually said that what they're seeing in terms of the troop buildup around Ukraine, including what the Russian troops are in Belarus, amounts to now 150,000. The number that has really been touted here in Washington has been about 130,000. So that's 20,000 more. And then just notably, I would say the president yesterday brought it back home domestically. He really brought the intersection of foreign policy to domestic politics when he talked about that if Russia were to invade and we were going to envision these swift, harsh sanctions, it would not be, quote, painless. And he was obviously talking about the oil market, what that means for the gasoline pump for everyday American consumers.
He's got some issues here at home. It looks like the Republicans have left his Fed nominees in limbo in terms of the confirmation hearings.
Yeah, and the Senate is heading out after this week for a week-long recess. So the timeline is getting incredibly worrisome in terms of how are they going to get these Fed nominees through. Potentially, it could be next month. What you have here is the Republicans trying to block the moving of the forward in this Senate committee of Sarah Bloom Raskin. And then you have Sherrod Brown, who is the chair of this committee, saying that we're going to be looping them all together. So if they're going to be looped in all together and the Republicans are not going to go forward on having a plan to move forward Sarah Bloom Raskin, they still want answers from her regarding her time working as a director. So this could drag on for weeks. The White House and Sarah Bloom Raskin has put a number of statements about her work there. Then they are basically holding all the nominees hostage. So this could drag on for weeks.
Okay, we wait for more details there. That could take weeks to resolve. Thanks to Bloomberg's Anne-Marie Hordern live in Washington. Now, inflation remains on everyone's mind, and today we got fresh data on that front. Katie's already talked about what we heard from China. Here in the UK, inflation unexpectedly accelerated for a fourth straight month in January, adding pressure for a Bank of England rate hike. Let's get more details from Bloomberg's Danny Berger. Another 30-year high then for UK inflation, Danny.
Yeah, 7 out of the past 9 inflation figures in the UK have come in hotter than expected. In this figure, you see things like clothes, you see things like food running very hot, adding to this cost of living crisis that the UK is facing, and also putting the pressure on the BOE. Is it a 50 basis point hike that they now will enact in March? Sounds like a similar debate happening in the US. Now, it's not just the BOE, it's the ECB. They have their own debate as well. And Francois Villeroy, who is a very influential governing council member, added to that debate, laying out a clear path that would allow potentially the ECB to start hiking rates later this year. He talked about the net asset purchase program, ending it in the third quarter, be it a bi-monthly, a monthly pace instead of quarterly, and that allows it to end, as I say, in the third quarter. Now, he was very clear in saying that this is about optionality, it's about policy normalization, not tightening, but if this did happen, again, it would allow the ECB to hike this year if they wanted to.
Danny, here in the U.S., we've had a couple of big disappointments on retail sales. We're expecting another number out later today. And Simon Flint writes on the MLive blog that a third disappointment in a row could lead to some more yield curve flattening.
Yeah, there's a real concern about the consumer in the U.S. We've had plenty of survey data that's showed some nerves, but look, economists are having a really hard time with this type of data just because there are so many oddities. For example, later today, we're expecting auto sales to be really strong. So without auto sales, just 0.8% growth, with auto sales 2%. So that's a little bit of the strangeness in there. There should also be an Omicron impact as well. But we do want to see some normalization in retail spending. The idea being we don't have that government stimulus, so you get to a lower, more steady base. Now, of course, it's not just this, Matt. We also have FOMC minutes later. Really, the key for there is going to be how do we explain Powell's very hawkish press conference after the decision. Of course, how many people are behind a 50 basis point hike? Kaylee, the market is certainly already behind it.
Yeah, and the market is looking to see if the Fed is lining up with its views. Thank you so much to Bloomberg's Danny Berger. Now, speaking of the markets, let's take a look at some individual stocks moving in pre-market trading here in the U.S. One moving to the upside is Airbnb, which reported after the bell yesterday a really strong quarter, 78% revenue growth. The Omicron variant didn't really seem to be holding people back from booking rentals. That stock is up about 3.4% as a result. To the downside, though, and plunging to the downside is Roblox. Of course, this is a video game platform company. As bookings came up short, average daily users also came up short, so that stock is sinking a whopping 16% before the bell. And another mover to the downside is Viacom CBS, which actually, as of today, is renamed to Paramount Global. The good news is Paramount Plus, the streaming service, has almost 33 million active users. The bad news is profit came up pretty well short of analyst expectations, so that stock is down nearly 7%, and we'll be speaking to the CEO of this company, Bob Bakish, at 10:45 a.m. Eastern later today, Anna. So don't miss that.
Okay, so media in focus later on. Thanks, Kaylee. Let us tell you what is coming up on the program. We will speak to Agnes Bellish, Chief European Strategist at Barings, get some investment strategy. How popular is Europe as a destination right now, given the geopolitical tension? We'll think about that geopolitical tension. We'll hear from the head of the Council on Foreign and Defense Policy, which advises the Kremlin. We will talk to Fyodor Lukyanov later on in the program. This is Bloomberg.
Has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
Season continues.
To the metaverse, to Spotify, to Qualcomm and beyond.
Bloomberg is fastest with the numbers and analysis.
Peloton becoming a proxy for this pandemic.
I think there's a tremendous opportunity.
Bloomberg, the fastest numbers and analysis you trust.
This is Bloomberg Surveillance Early Edition. We are simulcast on Bloomberg Radio and Bloomberg Television. I'm Matt Miller here in New York with Kelly Lyons. Anna Edwards is with us out of London. I have been focused this week on a Bank America Global Fund Manager survey showing that investors are going back to cash big time. Right now, 38% of survey respondents said they were shifting into cash from equities, from commodities, but mainly from bonds. And I think this is the biggest or most interesting part of the survey here. Investors are really short bonds, betting that the 40-year bull market is over. Joining us now is Bloomberg's equities editor, Ksenia Galushko. And Ksenia, I wonder, with investors shifting out of bonds, they're shifting into cash, but how much have equities been a beneficiary of this move?
Yeah, so equities actually have lost out in the past month, according to the Bank of America Fund Manager Survey. So investors have steadily, for over 2 years, have been strongly overweight equities. That was really the asset class that was outperforming everything else. And then in the past month, we have really seen a major shift. Now, this is due to the concerns about Fed's increasingly hawkish monetary policy, ECB joining the Fed, and also just the general realization that profit growth and in general economic growth will not be as strong this year as it was during the post-COVID recovery. So we're definitely seeing a shift out of equities, but Bank of America strategists do point out that investors are not extremely bearish just yet. They're just turning more hawkish.
Turning more hawkish, yeah, the UK inflation print underlining the reasons for that perhaps this morning then, Ksenia. I wonder how much inflation concerns stick to equities. Do inflation concerns worry investors in equities? I ask this because in the same survey that Matt was referring to there, we see investors saying they're not quite so keen on European Union stocks, but UK stocks, yes, they like those. That's the value play, of course. But it's here in the UK where we have these high inflation numbers.
Absolutely, yes. So today's UK CPI data was really quite surprisingly high. And the FTSE 100, the main stock index, is underperforming today. But at the same time, you're right. There's general realization that the UK stocks will outperform this year compared to the US market, for example, just because it's so much cheaper, just because it's been lagging over the past few years. At the same time, there's general realization in the Bank of America Fund Manager Survey that bond yields will continue rising, and that is always really good news for the value trade. And the value trade is really generous in the European stock market. You've got all of these cheaper sectors like energy, mining, all of these cyclicals, and especially banks benefit a lot from rising bond yields and rising rates.
Well, speaking of rising rates, we get the Fed minutes out later today in the U.S. Ksenia, what within it is the market going to be most focused on? What could potentially be the biggest catalyst?
Well, the main thing that markets are now focused on is the pace of rate hikes. The market is already priced in and prepared for the upcoming Fed rate hikes, but they just don't know exactly how aggressive these moves will be. And that's what they'll be watching tonight. It'll be very essential for investors who prefer growth and tech stocks, of course, because these were the stocks that have suffered the most in 2022, because they have been the market darlings over the past few years. They have been doing so amazingly well, but this year they have really been crushed by the anticipation of rising rates and the hawkish Fed. So it'll be a really interesting moment this evening for those growth investors.
Okay, Ksenia, thank you very much. Bloomberg's Ksenia Galushko with the latest on the markets. And if you want up-to-date market analysis, follow the Markets Live blog, MLIV Go. That is the function to use on your terminal. This is Bloomberg.
variant and the latest wave have an impact on not only consumer trends, but your business? And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. The Swedish telecom equipment maker Ericsson may have made payments to the ISIS terror organization. The CEO told a newspaper the money may have been used to gain access to certain transport routes in Iraq. Ericsson says it continues to, quote, invest significantly into an investigation into its Iraq-based operations. Bloomberg has learned that Germany's national railway operator Deutsche Bahn is preparing to sell or list its DB Schenker logistics unit. A deal could be valued at about $23 billion. Like other transports and logistics firms, the Schenker unit has gained in value during the pandemic. And more information coming out about that U.S. investigation into block trading. Bloomberg has learned that authorities are examining the involvement of one of Morgan Stanley's top equities executives, Pawan Pasi. The probe has to do with whether banks improperly alerted certain clients to market-moving transactions. Coming up, we'll get back to the broader markets with Agnes Balaish, Chief European Strategist at Baring Investment Services, her reaction to the hotter-than-expected UK inflation data. This is Bloomberg.
nuestro estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. President Biden says the threat to Ukraine hasn't ended. The president says a Russian invasion is still possible because its troops are in what he called a threatening position. He also said the U.S. hasn't verified Moscow's claim that some troops have been withdrawn. Russia has denied that it's planning an invasion. In the UK, inflation unexpectedly sped up for the fourth month in a row. That's a surprise that adds pressure on the Bank of England for a supersized interest rate increase next month. Annual price growth in January rose to 5.5%, a new 30-year high. And in the United States, traders are trying to figure out how fast the Fed will move to raise rates. They may get clues from Fed minutes and retail sales figures, both of which come out later today. A surge in auto sales is expected to offset Omicron-related weakness elsewhere. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons in New York. That's what you need to know then, Matt. What are you focused on ahead of the start of U.S. trade?
Well, I want to point out, first of all, that the UK, car makers in the UK are pushing for a new regulator for EVs because they're worried about lines around charging points, which I think is pretty interesting. In terms of what I'm focusing on in U.S. markets, really it's the turn down that we saw in futures and investors going into bonds, signaling that they are concerned about this I guess, new narrative for what's going on in Ukraine, slightly new. S&P futures down after the cash trade closed up 1.6% yesterday. So by the end of the session yesterday, they were really positive about reduced tensions in Ukraine. And now it looks like markets are a little bit more concerned about the fact that that could have been maybe a head fake. 10-year yield still over 2% at 2.0347. But NYMEX crude is gaining ground, as you would expect, when markets are more worried about geopolitical tensions, especially involving Russia or any OPEC countries. You see gains in these prices, 92.78 for a barrel West Texas Intermediate, and Bitcoin kind of bouncing back and forth between gains and losses, but holding pretty steady at 44,000. Kelly, what are you seeing in terms of pre-market movers?
Well, there is a lot of earnings-related movers this morning, Matt, and a lot of them are actually outsized moves. A couple we need to point out to the upside, one of them being Upstart Holdings, which of course is an AI lending platform. It reported better than expected results and forecast. As a result, that stock is up nearly 26% before the bell. You also have Airbnb moving higher, revenue up 78%, shucking away the Omicron variant. Doesn't seem to have hit the company too hard in the last quarter. The CEO saying it was their best year ever. That stock is up about 3.4%. To the downside, though, Toast, which of course is that restaurant software company, gave a disappointing forecast. It's down 17%. And Roblox bookings and users coming up short. So that stock also down more than 16% before the bell, Anna.
That last one gets a few mentions in my household, not by me, I'll add. Kaylee, let me take you through what's happening on European equity markets then. 2.5 hours into our European trading day, and we see European equity markets subject to the same questioning, I suppose, of that latest geopolitical narrative that Matt was just referring to as influencing the US futures picture. So coming off recent highs, coming off earlier highs, we spent the first couple of hours of the European trading day in positive territory, building on yesterday's gains, which were really strong for European equity markets. The pound also a little bit of a move to the upside, though a little bit of dollar weakness, actually, because we see the pound a little stronger this morning. Part of that is the inflation narrative. We've talked about this inflation data coming in ahead of estimates once again for a fourth month in a row, a 30-year high on inflation, and again adding pressure to the Bank of England. We also put in here the Polish zloty, and this is an interesting geopolitical development within Europe, but does have some interesting repercussions perhaps for various economies in the East. We see money moving from Brussels, of course, to Eastern European countries, and it can have some conditionality attached. That is the verdict of one particular European court this morning, and that perhaps moves to the disadvantage of the current administrations in certain parts of Eastern Europe. We saw the Polish zloty coming off its recent highs as a result of that decision. Ericsson down by 10.3%. Kaylee was talking about this story a little bit earlier on. Did they pay some money to ISIS, the terrorist organization, to gain access to parts of Iraq? The company doesn't know, but they are continuing to put money into an internal investigation on that front. Kaylee?
All right, Anna. Well, let's get back to the macro picture. And joining us now is Agnes Belais, Chief European Strategist at Barings. And yes, when you look at the hotter than expected UK inflation data we got today, inflation pressures really broadly across the UK and Europe. How much pressure are central banks under, specifically the BOE now, and then the ECB by extension?
Hey, good morning, Kaylee. Yes, every central bank has to figure out what's the path of inflation in the second half of the year and how strong is the underlying economy so that it knows how to calibrate its rate action, basically. And yes, the Bank of England will have a tough path ahead, the same way as the Fed and the ECB. And I think they have basically two scenarios ahead. The economic growth underlying this inflation momentum is strong, and they will be able to hike. And it's a fine balance for them to tame inflation without without putting a lid on growth, or whether they're actually going to face a very weak growth and therefore things will fall back to where they were before this pandemic, which would be very sad.
Yes, and what does that depend on, Agnes? What are we looking for? What's the big uncertainty looking at the second half of the year? Because lots of people seem fairly united in the expectation that we're going to see hikes from the Bank of England in the short term. But then the second half of the year starts to look more cloudy, a little bit less visible, if you like, because of the inflation pressures, because of the rising cost of living and tax increases in the UK case, and what that might do to the UK consumer. Is that all of that adds up to one big uncertainty for the second half?
Yeah, exactly. So there's the purchasing power of consumers and how strong it's going to be. So there's, of course, taxation to pay for all this fiscal stimulus during the pandemic. But there's also the growth of wages, which is a flow, and then the growth of wealth, which depends on savings, which we know are high and reduce the price sensitivity of demand, but also of wealth. So stock markets have done really, really well. And then there's the housing market that's bubbling a little bit as much on the continent as in the UK and, of course, in the US, much more in the US, of course, but because of the particular financing sources that they have access to, these fixed rate, very long-term mortgages that are completely insensitive to rate hikes, so that central bank might have to do more. But back in Europe here, the second half of the year will tell us whether wages are catching up with inflation and therefore the purchasing power is maintained and demand will power ahead or not. And it's actually likely that not. It doesn't exactly catch up with it. And then, of course, what we're all hoping for is an alleviation of all this supply side disruption, which would actually provide a second wind to growth.
And given that the supply side disruptions is one of the driving forces behind inflation, although there might be other effects now, what value do you see there being in outsized hikes, Agnes? Do you see arguments in favor of a 50 basis point hike from the Bank of England, for example? I know that in the US we have similar conversations, but is there value in shocking the market on the way up with rates?
Yeah, that's really what it is, a shock to the market. Is it really necessary now? I think they'd have to think about how effective that would be. So there would be a knee-jerk reaction. It would be brutal, probably, even though it's priced in, it's never welcome. And the market is probably trying to rush central banks into taking nervous, brutal reactions. But I don't think central banks will do so. They've invested so much in this recovery, and they've supported governments on the side as well to do that much for the fiscal deficit and all this spending and all this investment for the future. I don't think they have an interest in hiking interest rates so brutally, but they can plow ahead a path of gradual, regular interest rate hike until the end of the year. The ECB, we know, wants to normalize into positive territory. It cannot be rushed. It doesn't want to be rushed into doing so. The BOE as well will hike interest rates in March, like it should, like it has announced, but there's no need really for a 50 bips rate if it shows that it's going to continue, that this is the start of the exit of very, very accommodative monetary conditions.
Agnes, I point out as you spent years with the IMF and you helped put together the European Stability Mechanism, which was the Euro area bailout fund. We saw spreads blow out, peripheral spreads blow out a couple of weeks ago, and it was really interesting. Should we be worried if inflation hits hard about European budgets, about peripheral European budgets, peripheral European economies?
And spreads. So in the background to all this pandemic saga and policy mix, treasuries silently have been improving the debt profile, partly in the periphery of Europe. They have lengthened average maturities. They have issued as much as they could at fixed interest rate so that the debt burden doesn't blow up when central banks start to hike, and they have to hike. They also have lowered their issuance cost, obviously, and the current issuance rates are actually lower than the average interest rate on debt, so that they can still issue and reduce their debt cost. So I think they're pretty much ready to take on this normalization of monetary policy in the periphery, and the widening of spreads is taking this into account, and it's probably now at fair value.
Okay, so maybe more of a normalization than something to be concerned about. Agnes, thank you so much for joining us. Agnes Belesh joining us there from Barings. Coming up on the program, we'll return to our top theme around geopolitics. Fyodor Lukyanov, ahead of the Council on Foreign and Defense Policy in Russia, which advises the Kremlin, will be speaking to us next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kayleigh Lyons in New York. Now, NATO defense ministers kicked off a two-day meeting in Brussels today. NATO Secretary General Jens Stoltenberg says there are no signs of de-escalation on the ground by Russia. As President Biden warns, the threat to Ukraine has not ended. Estonia's defense minister has echoed these concerns.
We have to see with our own eyes what's happening, not just listen what's happening, because it's always or mostly disinformation.
So you're worried this video that they're showing of the tanks moving away is fake news? It's a trap?
Absolutely.
That was the Estonian defense minister speaking with Bloomberg earlier. Joining us now is Fyodor Lukyanov, chairman of the Russian Council on Foreign and Defense Policy, which advises the Kremlin. Fyodor, very nice to speak to you. Thank you for joining us. We've heard then from the Americans, from NATO, from the Estonians there, some skepticism about whether Russian troops really are pulling back on the ground or whether this is Russian misinformation. Can you shed any light on this? What do you understand is happening on the ground?
I have no idea what's happening on the ground because I'm not there and I'm not following in detail our military exercises. I think the whole exaltation about imminent Russian invasion in Ukraine does exist in the West, and it's no sign of that here in Moscow, no sign at all. The exercises, they go according to the schedule, and it seems they start to withdraw partially forces which ended their part of exercises, and that will continue, and in say 5-7 days the whole redeployment will be completed.
What will happen if Ukraine goes ahead with its plans to join NATO? Is that a real problem for the Kremlin, a red line?
Yes, this is the red line indeed, and I think Russian leaders and Russian representatives have said it many times very clearly. So Russia will not allow that to happen. So that's the whole game and the whole diplomacy now around how to formulate the possible future status of Ukraine outside NATO, but of course in a way that Ukraine will feel secure.
How would Moscow react? I mean, the U.S. and Europe have laid out pretty clearly what they would do were Russia to invade Ukraine in terms of economic sanctions. How would Moscow react? What would be the answer from the Kremlin if Ukraine applied to join NATO and those processes moved forward?
But what is the reason to expect that Ukraine will apply to join NATO and NATO will start to consider this application? What we hear all the time now from all Western leaders, starting from President Biden and then everybody, Chancellor Scholz, French President Macron and others, there are no plans at all to enlarge NATO and to accept Ukraine. So why should we discuss such a
Isn't this one of the things that Vladimir Putin is concerned about? Isn't this one of the reasons Russia feels threatened?
Yeah, it is, but it is not just the formal membership in NATO, but also Ukraine becoming a part of security and military sphere of the United States, which is happening. The pumping up arms in Ukraine is happening. So I think what is needed is a very substantial, serious discussion about both status of Ukraine and the arms control in the large area of Eastern Europe, which sooner or later will start to happen.
Fyodor, on the subject of NATO, has the action that Vladimir Putin's taken so far, the deployment of more troops toward the border, these drills and exercises, not backfired in the sense that it has perhaps reinvigorated, reinforced the NATO alliance and brought more troops closer to Russia's borders?
It did, but at the same time, first point, I don't think that the real capacity of NATO increased significantly because of those symbolic moves. That's really important in terms of demonstrate commitment, but not so much in military terms. And secondly, NATO is an alliance which is not considered by Russians as a friendly one, and it will remain so. So it's better to have a clear picture of our relationship than to imitate cooperation and interaction as we did for a long period, being actually very hypocritical to each other.
And thinking of friendships, Fyodor, the friendship between Russia and China, are there any limits to that? What kind of support could Russia expect from China if there were to be military hostilities between Russia and the West?
In case of military hostilities between Russia and the West, China will be on the Russian side, but China will not participate in that, no doubt about this. The same for a Russian participation in hypothetical Chinese military hostilities with the United States in Asia. So Russia and China guarantee that they will never work against each other, firstly. Secondly, of course, all ways to support each other, not in military terms, but in all other terms, of course, will be applied. But it's no military alliance by no means.
Fyodor, thank you very much for joining us. Fyodor Lukyanov, chairman of the Russian Council on Foreign and Defense Policy, which advises the Kremlin. Good to get that perspective on the program. Coming up in programming a little bit later, we'll get the view from Angela Stent, former U.S. National Intelligence Officer for Russia and Eurasia. That's at 12:30 p.m. in New York, 5:30 p.m. London time. This is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lines with Matt Miller in New York and Anna Edwards in London. And also joining us now, Tom Keene, co-anchor of Bloomberg Surveillance. Tom, it's Fed Minutes Day. Do we even care about the incremental updates on monetary policy at this point, or is it all about foreign policy right now?
No, the Fed policy's there. So there'll be some, there'll be several, there'll be paragraphs that matter, and we'll move on from there. Frankly, off of what we've seen in the United Kingdom this morning, you really wonder what the inflation ballet will be. And again, that important retail sales report, Kaylee, which I think will be really front and center in economics, finance, and investment today. And the economics of Ukraine, dovetailed on the foreign policy, is a litmus paper for any nation, which is its currency. And it really shows the frontier nature of the Ukrainian hryvnia. This is USD UAH for those of you with the Bloomberg terminal this morning. And the answer is, going back 25 years, it has won mass depreciation. And critically, since 2014, a 68% depreciation.
What I think is really interesting, we've had some great writing on bonds the last couple of days from Cormac Mullen and Garfield Reynolds on the MLive blog. Garfield points out we're facing a really unknown situation here. I mean, the market's pricing in a 150 basis point hike to make up the 150 basis point cut we had earlier. And we know what to do with that, but in terms of quantitative tightening, we don't know what to do with that, and that's really the concern.
I would say that the balance sheet mystery is ascendant right now, Matt. There's much more of an understanding of rate dynamics and particularly new pressure in the United Kingdom to raise rates. But the balance sheet ballet in the United States, and frankly the other descriptions of it in other nations, is a huge unknown. And what's critical is the when of it. When do we actually start to affect the balance sheets? That's a massive mystery right now.
All right, Tom Keene, co-anchor of Bloomberg Surveillance, thank you so much. I want to focus as well on what else we're watching today. I'm watching something Tom mentioned, which is the retail sales data we're getting at 8:30 a.m. Eastern time. We are expecting it, economists are expecting it to be up about 2% month on month, but a huge chunk of that is going to be from autos. When you back autos out, we're only looking at about 0.9%. And obviously, this data is important because it sends a signal on the all-important American consumer, obviously telling us about their propensity to spend, as you see real wage growth lagging as inflation is accelerating, savings being drawn down. What does that do to the income that people are willing to put forward and put out into the U.S. economy? We've seen a series of downside surprises, Matt, so it'll be interesting to see what we get from the data today.
Yeah, and you know, we didn't get to this with Agnes, that we were talking with her earlier, but she points out that even if the consumer has savings, the consumer is also leveraged up a lot, the U.S. consumer. So that is an important piece of the picture. I'm looking at China. I'm watching to see what they may do. The U.S. apparently is concerned that China may take advantage of tensions in the Ukraine by trying to do something in the Indo-Pacific region. This, according to U.S. Commander of Pacific Air Forces, General Kenneth S. Wilsbach. He said that Beijing may try to provoke the international community. And I just think, you know, this is, you know, one problem that the international community doesn't need to deal with right now, as we're all watching what happens in Russia. So it'll be interesting to see if those two join forces.
Yeah, absolutely. And we talked there with our guest a little earlier on, whose organization advises the Kremlin about that friendship between Russia and China and where that takes them. I'm watching then the latest on Ukraine, and the big question for markets and everybody else really is Russia really pulling back its troops? We've heard skepticism from the US, from NATO, from the Estonian defense minister, who we brought you our interview with a little bit earlier on. But what kind of evidence do we get from the ground then as to whether those troops are being drawn back? Because that does seem to be something that markets are focused on, markets have been moving on in the last couple of days. We'll continue to tune into that, even as we hear slightly better mood music from President Putin and Sergei Lavrov talking about the security proposals being positive. More on the geopolitics coming up. This is Bloomberg.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Is starting to see expectations around longer-term projections of inflation starting to rise, potentially to uncomfortable levels.
We just don't know at this point how much of this will self-correct.
The big push and pull is going to be the battle between inflation and the Fed response to it.
You don't want to be tightening so fast that you choke off the recovery.
The yield curve is telling us that the Fed is going to overreact and then pull back. And that's exactly what the Fed should not do.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Retail sales coming up from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Futures down 18 on the NASDAQ, down 5 on the S&P. TK just a little lighter, down 0.1%.
The market's churning today. That big retail sales statistic coming up this morning. It does matter, John, but I'm sorry. I'm going to UK inflation. It is now a spike. John, it's 3.4 standard deviations. That's a huge deal for the economy, for the people, for the politicians.
5.5%, a new 30-year high, and a conversation, Tom, about, guess what, maybe 25 basis points isn't enough. The conversation we're having here in America, a similar one taking place in the UK.
It's similar, John, but I need you to stop the show now and explain what happens in April to the people of the United Kingdom when they see a combined energy tax reality.
It's going to get very difficult, Tom, and I think we're already there, to be fair. It's a similar story, as I say, here in America, like in the UK. Higher energy costs, higher interest rates. There's going to be a real pinch this year, TK. What will be interesting is to see how this hits growth, hits the outlook for growth in both economies.
Yeah, it's going to be interesting. Of course, John, we're watching Russia. Some headlines in the last 2 hours.
Let's talk about those headlines, Lisa. It seems to me that the Russians are saying one thing and NATO and the United States are saying, okay, that's good news, but we haven't seen it yet.
And frankly, there is concern about cyber attacks on Ukraine in the meantime. What does it mean to back away? What does it mean to have a true de-escalation when it's still unclear whether Putin has gotten what exactly it is that he wants? I thought it was fascinating yesterday hearing President Biden talk about this to the American people and talk about high gas prices as a necessary consequence of standing up for democracy, how much he's going to try to message the sort of inevitability of that climb in the price at the pump.
Anne-Marie's been on top of that. We'll catch up with AMH down in D.C. in just a moment. For me, TK, this line from Jens Stoltenberg, the NATO Secretary General, it appears Russia continues a military build-up. Very difficult at the moment, Tom, to get an accurate picture as to what is actually happening on the ground.
Well, yeah, and the markets show it. I mean, it's a conundrum within the markets that shows that we don't know what's going on. John, what I've done is I've really read in the last 24 hours on the Minsk Accords. There are 2 of them. Duncan Allen with the high ground at Chatham House. And I'm sorry, here's my sophisticated analysis, John. It's a mess.
Well, I'm pleased you did the reading, Tom, because for me, whenever I look at it, it's incredibly confusing. Tom, isn't it incredibly confusing? at the moment too.
It is a partition A and B. Ukraine wants full sovereignty of Ukraine and the region to the southeast of Donbass, and Russia wants a partial sovereignty where the near abroad of Ukraine is finally attached somewhat constitutionally to Russia.
We'll build on that through the morning. Lisa has got a ton to get through as well. Retail sales, Fed minutes, futures right now down a tenth on the S&P, on the Nasdaq 100 down 15, 16 points with negative a little more than a tenth of 1%. Yields come in by almost a basis point on 10-year yields, 2.0364 in the FX market. Euro firm a stronger 113.79. A conversation in Europe today about maybe winding down QE by Q3. We'll pick up on that. And Lisa, a lift in crude, 93.17 on WTI, up by 1.2%.
You mentioned earlier, John, retail sales. I am really, really interested to see what this 8:30 a.m. read will be. January retail sales in the United States. The expectation is for it to rebound after a deceleration in December. However, how reliable is this data? And look for people to parse beneath the surface. How much is the hot auto sales market, frankly, driving all of this? And then how do we strip out inflation? And then what does it look like? People are going to be trying to understand whether retailers, whether consumers are starting to slow their purchases because things are getting a lot more expensive on a real basis. At 10 a.m., February NAHB housing market index data comes out. How much do we continue to see that acceleration in the momentum of the housing market at a time when rent prices have climbed to the highest levels going back to where, right around the crisis back in 2008, 2007. Huge concern not only for the U.S., but also for the ECB. I thought it was really interesting to hear Isabel Schnabel in the Financial Times talking about how they have to start considering the fast price increases in housing in the European region when deciding how quickly to move. And at 2 p.m., we get the Federal Reserve meeting minutes. This, to me, is the highlight of the day. Yes, retail sales, but what does the Federal Reserve say about winding down its balance sheet? It's a $9 trillion book of assets, and we're talking about this at a time when the yield curve, the gap between 2 and 10-year Treasury yields, has narrowed to about the least going back to the middle of 2020. At what point do they start talking about reducing the balance sheet, John, as a tool to steepen that yield curve and create a little bit more of a free market feel to a market that has been heavily controlled by the Federal Reserve?
And Lisa, you haven't forgotten. Remember last time around where we didn't get massive moves lower on the actual meeting, but we did on the minutes from the Federal Reserve coming into a new year.
And I think that you could have a significant influence. And we actually didn't talk about this, but there's a 20-year Treasury auction today that's going to be very interesting considering the fact that the Fed is going to stop buying 20-year securities in March for the first time, really, almost in this iteration of the security. There isn't a lot of liquidity there, John. A lot of people are concerned about that.
Do you want to tell Tom the time, the size?
It's 1 p.m., I believe $19 billion.
1 p.m. at $19 billion.
That's about what I paid for roses yesterday. It didn't work out.
Still sleeping on the couch.
Still on the couch. Lisa, can't get rid of him. Thank you so much. 8 years ago, Tom and I sat around a table and had a big conversation about who would hike first, the Bank of England or the Federal Reserve, and who would hike more, the Bank of England or the Federal Reserve. In the end, the Bank of England waited, and did very little at all. In fact, it was the Federal Reserve that was almost flying solo for the big developed market central banks. It will be different this time. Dara Mayer, the head of America's research and FX strategy at HSBC Securities, joins us right now. Dara, how difficult and different will this one be compared to what we saw last time around?
It's a really tricky time for central banks. I mean, Tom used the word conundrum in the terms of market behavior, but for central banks, this is it. I mean, you've got an inflation problem, so do you respond to that? You've got a real income squeeze, so do you take greater account of that? This is really tricky. I mean, look, as a house, we think the Fed errs on the side of a 50 basis point move in March, whereas for the Bank of England, we think they're going to just stick with the 25 pace that they delivered last time around. Clearly, the FX takeaway that is it should be lower cable, but they are pretty, well, certainly the Fed call still very finely balanced in our opinion.
Dara, let's go to the fan distribution that's personified by jump conditions. We have a 3.4 standard deviation move in United Kingdom inflation. Are we going to start to see currency markets, currency pairs in a jump condition where there's big figure opportunity?
Honestly, I think the FX market is struggling to get its head around this one because it's facing that same conundrum that policymakers are facing. What will be the spin? And, you know, as John pointed out, in the UK, there's going to be a very transparent income squeeze coming up with the energy price hikes that are legislated for. We know they're coming, but that's going to have a huge impact on the consumer sentiment. That said, yesterday we had wages data, PAYE data, which showed wages growth, at least for that sector, growing quicker than inflation. So positive real income growth. You're not seeing that in the US, you're not seeing that in the Eurozone. So I think that still allows the Bank of England to tighten. I just don't see that. The 5 people who voted for 25 basis points the last time out, why is one of them going to suddenly vote for 50? I just don't see it, despite that big inflation upside.
The market seems to agree with some of your concerns about the economy. If you look at the 2-10s yield curve in the United Kingdom, it's only a few basis points away from inversion, and George Saravelis was talking about this concern with the market even pricing in rate cuts by the Bank of England next year. What do you think is sort of the consequence for the pound if there is that type of backdrop?
Look, it is very peculiar, isn't it? I look at the forward OIS market, so that has all the tightening coming in the next 12 months, and then has 100 basis points lower for 5 years out. So in other words, the market is saying, hey, yeah, we think you're going to tighten, but we think it's a mistake, or at least it won't stick. And that reflects what we're seeing in inflation, as you say, in terms of the economy. There's a squeeze on consumers, but there's also a squeeze on businesses. So it's all a pretty toxic mix, I would say, for sterling, and thankfully none of us have even mentioned Brexit, so that's great. We can get to a lower sterling with that.
I'm so pleased we don't talk about that anymore, Dara. That's the framework for thinking about the central banks, the respective economies, the UK, Europe, the United States. What's the conviction trade in foreign exchange for you?
Look, I do like lower sterling. I think even this morning we were recommending buying euro sterling as one way to play that. I think lower cable as well. They're for me the more straightforward trades. You've got 75 basis points of tightening priced into the Bank of England over the next 2 meetings. In other words, you have to deliver 50 at one of them. I just don't see that. I think we get a 25 and a 25. So that's one. And generally, conviction still there in terms of our modest dollar strengthening. It's not glamorous. It'll be a modest trend, but I think it'll be pretty relentless. So dollar bull.
Dara Maher, thank you, sir, of HSBC Securities, looking for a little bit of weakness through sterling. Dara, as always, thank you very much. We heard from the Heineken CEO a little bit earlier in a telephone interview. Now, if this doesn't capture the inflation story, I don't know what will, Lisa. The Heineken CEO saying consumers may cut back on beer. They might cut back. Well, you don't drink beer, Tom.
That's true.
We know what you drink. Yeah. Something else.
Okay.
Lisa, this quote, if you look at the inflation that we're currently experiencing, it's the highest in 10 years, and it's not just in our product categories. There's a man worried about the consumer pushing back now. That wasn't the story of last year. It feels like it's a bigger one in 22.
I like that you talk about the staple that is beer, and that when you get consumer pushback, you know things are rough when people are pushing back on their beer consumption as a result of higher prices. But it does exemplify something you're seeing on a widespread level. You're not just seeing it there. Also, farmers, the pesticides that they actually have to buy, the prices have skyrocketed. Basic supplies, which is actually going to lead to the price of food to increase as well. Weddings. There was a story in the Wall Street Journal about how visiting people at their weddings is going to be a lot more expensive.
That was always expensive. I always had massive complaints about that, about how expensive it is. Well, Tom, why is it so expensive to be a guest at a wedding?
It's out of control.
I'm getting you going. I'm going. I'm ready to go. Let's go.
I am saving every day for the Riggs wedding. It's going to be John. It's going to cost me a fortune.
And you got invited to Taylor's wedding. Lisa and I did not.
Well,
you got an invite.
About it.
Does Taylor know that you're upset about it?
No, I'm just really upset.
She does now.
I mean, it's like 700 people.
Futures down 210. She's 700. And Lisa and I didn't get an invite.
I don't know.
Down 210 on the S&P. From New York, this is Bloomberg.
With the First Word News, I'm Ritika Gupta. President Biden says the threat to Ukraine hasn't ended. The president says a Russian invasion is still possible because its troops are in what he called a threatening position. He also said the U.S. hasn't verified Moscow's claim that some troops have been withdrawn. Russia has denied that it's planning an invasion. In the UK, inflation unexpectedly speeded up for the 4th month in a row. That's a surprise that adds pressure on the Bank of England for a supersized interest rate increase next month. Annual price growth in January rose to 5.5%. That's a new 30-year high. And it's a standoff in the Senate Banking Committee. Republicans on the panel blocked votes on President Biden's 5 picks for the Federal Reserve. The dispute has to do with only one of the nominees, Sarah Bloom Raskin. She's the nominee for Vice Chair for Supervision position. Republicans say she hasn't adequately addressed questions about her role as a board member of a fintech company. Senate Banking Chair Sherrod Brown says he'll reschedule for votes. And China's President Xi Jinping has ordered Hong Kong to get the city's coronavirus outbreak under control by all necessary means. That's an unusual intervention that could lead to stricter measures and possibly a broader lockdown. Xi's remarks came after Hong Kong Chief Executive Carrie Lam said the outbreak had overwhelmed the government. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
Good morning, traders. As you can see, I placed a stop for our British pound. We purchased one contract for British pound at 135.5. Right now I'm going to I placed stop at 135.7. It will give us £700 in profit. So all of you guys who copied this trade, who traded yesterday with me, here is the price you have to place at stop on for your profit. If the price for British pound will change its direction, if it will move lower, so we are safe right now, and we will not lose any money. Okay, guys, stay safe, and I'll speak to you later.
Over the uniform regulation of share buybacks, and I think because he is giving a consideration to each company's individual circumstance and say decisions.
election season continues.
To the metaverse, to Spotify, to Qualcomm and beyond.
Bloomberg is fastest with the numbers and analysis.
Peloton becoming a proxy for this pandemic.
I think there's a tremendous opportunity.
Bloomberg, the fastest numbers and analysis you trust.
We are ready to respond decisively to Russian attack on Ukraine, which is still very much a possibility. The Russian defense minister reported today that some military units are leaving their positions near Ukraine. That would be good, but we have not yet verified that.
The President of the United States on the same page as the NATO Secretary General Jens Stoltenberg from New York City this morning. Good morning with Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Your equity market just slightly softer, lower negative down a little more than 0.1% on the S&P, down 7 points. In the bond market, we settled down in and around 2% on a 10-year yield, 2.0382%. Coming later this morning, retail sales 8:30 Eastern, about 2 hours and 12 minutes away, Tom. Then after that, later this afternoon, the Fed minutes.
On Ukraine, let's get to it today. It seems to be a quieter morning, but we all know that is perhaps not true. Anne-Marie Horton joins us from Bloomberg, Washington, of course, with a reporting from the White House as well. Anne-Marie, in 2014, 370 miles southeast of Kiev in Donbass, the territory was taken by, I'm going to call it separatists. They're separate from Ukraine. Maybe they were separate from Russia. And we ended up in Minsk, Belarus with item 1 of the Minsk Accords and then item 2. And there's a whole sequence to this, folks, which is beyond confusing. But Anne-Marie, what it comes down to, this is a uniquely Russia, Ukrainian, France, and Germany agreement. How does the United States insert itself into the Minsk dialogue if that's what Mr. Putin wants?
It is certainly what President Putin wants. He said that yesterday alongside Olaf Scholz, and he continues to say that Ukraine is not implementing the Minsk Accords, but they interpret it very differently, both Moscow and Kiev. The United States is not part of this group that met, and really Angela Merkel did a lot with the Minsk Accords in 2015, and we should note that the reason for the Accords really to stop the bloodiest of the fighting in this Donbass region, in Donetsk and Luhansk. But so far, the Minsk Accords have basically not been implemented because the two main parties, Russia and Ukraine, don't agree on what this accord actually means.
Duncan Allen, definitive at Chatham House on this, and as he mentions, Anne-Marie, the word Russia is not even in the accord. It is remarkably complex. Usually in diplomacy, complexity. Kissinger wrote about this in his arch book. Complexity leads to nothing getting done. Is that how you perceive this?
I do, because look, it's 2022 and they're still fighting in these regions, and now you have a Russian buildup of troops surrounding Ukraine, which we should note yesterday the president said is now at 150,000 when you include those troops in Belarus that are encircling Ukraine, even though the U.S. did get the message from the Russian Defense Ministry in a video they posted that they were pulling back troops. The U.S. said that's not verified. I certainly view the Minsk agreements as something Vladimir Putin certainly wants, and the way Russia interprets it to be implemented, because really what that would do, and I read that Chatham House report, Tom, actually a number of times because it is incredibly confusing, but what it would do is create a Trojan horse within Ukraine. It's not like this territory would be given to Russia. He would have, or the Kremlin-backed Luhansk and Donetsk would almost have veto power on the policies that are happening in Kiev. For President Vladimir Putin, most notably, that would be a potential of joining NATO or even joining the European Union.
Anne-Marie, what did we learn from the U.S. standpoint yesterday from what President Biden said about responding if U.S. soldiers were attacked? There were very specific language sort of put out there. What did we learn in terms of the threshold for the U.S. getting more aggressive here?
Well, the U.S. said once again it would not send troops to Ukraine, but the president did bring up NATO and Article 5 and that they would defend that. And we have seen U.S. move troops to bolster the eastern flank in some of those Baltic countries, most notably, of course, Poland, which the U.S. has moved its embassy ever so close, about 80 kilometers from the Polish border to the western part of Ukraine. I think what was also interesting from the president's speech yesterday was that he really, for the first time, pivoted to what this would mean for for everyday Americans and consumers. This is where foreign policy intersects with what he's focused on domestically at home in the domestic politics. And that is the global oil market and what it means for gasoline prices.
That's exactly where I wanted to go, Anne-Marie. He was talking about the sacrifice of higher oil prices for democratic values on a global scale. Is this basically an admission that they cannot do much to bring down gas prices heading into the midterm elections?
Well, they said they're going to try, and you see senators potentially trying to get rid of this gas tax, have a little bit of a holiday for it. But I do think the president was just being frank that they don't have a ton of control on things like geopolitical risk. We should also note, in the oil market, the IEA, Fatih Birol, was talking this morning in Riyadh about the fact that there's about a 1 million barrel differential between supply and demand, and OPEC is just not meeting those targets. Then you add in what the president was talking about and the fact that if there is an increase in geopolitical risk or a Russian invasion, you are certainly going to see oil prices spike.
Anne-Marie, just finally from me, there's been so many complaints about the way the president has handled foreign policy. On this particular occasion, we're not hearing those complaints from Republicans this time. That's new. It seems like they support the effort from this president and this White House on this issue.
Certainly, they've gone mum on this, and they support, as you say, really giving their backing to what the administration is doing. We should note that in the polls over the weekend, CBS, YouGov, there's not a lot of support from the public in terms of wanting to be involved, a U.S. strong response on this. But Republicans think the White House is doing a good job. The one issue right now is, of course, getting that sanctions package over the hill, which we should note last night, Senator Risch and Toomey came out with a Republican version. And interesting, I want to tell you what it's named. It is named the Never Yielding Europe's Territory Act, also known as the Niet Act, which in Russia means no. So I think you can see where that's going.
AMH, thank you. Great colour down in Washington, D.C. Anne-Marie, thank you. The Republicans, Tom, picking fights elsewhere with the Fed picks from this White House. That's where the focus was yesterday in the early part of the morning.
Let's segue to this. And this is a big deal, John. And this is what happens when you have a track record and when you have a past. Most institutional selections are advantaged if there's no past. Sarah Bloom Raskin has a past, and they're picking it apart.
And one particular article that she wrote in the last few years has got a ton of attention, Lisa. There's a process here about getting out of committee. The Senate Banking Committee, Sherrod Brown, would like to have a vote on all of the picks at the same time. He's rejected the idea that Sarah Bloom Raskin will get a separate vote. The Republicans seem to be very focused on making that happen.
So at what point, this is game theory, right? At what point does it shift the blame to the Republicans if they say, no, we want to vote for all 5 different members? And at what point does it go back to the Democrats for not being willing to get some of the confirmations through that they can? How does this sort of play into the midterms? I mean, that's basically what we're trying to message now. As we have so many absences still on the Federal Reserve, it needs to function.
Senator Brown said this, quote, "We're going to get her confirmed." Some real tension over this, and we anticipated this in many ways, Lisa. We were talking about it yesterday morning.
Yeah.
This gets trickier, not just for Sarah Bloom Raskin, but also because of the inflation numbers we've seen more recently.
How do they target that at a time when there's not that much that anyone can do in the very near term?
Futures down a tenth on the S&P from New York City. Retail sales 2 hours away. This is Bloomberg.
this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
To recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
Futures down just a little bit softer, lower, negative 0.1% on the S&P. On the Nasdaq right now, similar move on a Russell 2, no drama. 3-day losing streak, we bounced back in yesterday's session, just a little bit of a pullback this morning. Into the bond market, 2s, 10s and 30s, a fair of treasuries going into the data later. Retail sales, PPI yesterday, really hot print on CPI in the UK. I'll pick up on it just a minute. 10-year yields, 2.0382%, 235, let's call it on 30s. Got to go back to May last year to see 30-year yields that high, 156.40. We breached 160 in the last week. We've pulled back since then, down another basis point. So from the US to Europe to the UK, what a lineup we've got for the month of March. March 10th, the ECB, the 16th, the Federal Reserve, the 17th, the Bank of England. Let's talk about the Bank of England. 5%, a 5 handle on inflation. Again, we're north of that level now. North of that level, a fresh 30-year high, and a conversation about, guess what, a 50 basis point rate hike. Cable out to 135.68, Tom, is setting us up for a really interesting month ahead for global central banks. That's the Bank of England. We can talk about the Fed through the show. For the ECB, Governor Villeroy of the Governing Council of the ECB talking about winding down QE by Q3. If they do that, maybe that sets us up for an interest rate hike, Tom, before year end.
Well, Will, in the currency market, John, as Dara Meyer said, it's really ambivalent right now. I was sort of surprised that sterling didn't move more, like breaking out 136 with just the assumption of rate up. But
what we're starting to think about, though, Tom, is just the limits here, the limitation here.
Right.
Does higher inflation start to put the brakes on growth? Does it limit the central bank's ability to really push this much further? We know that the story shifted, but what shifted is the pace and the start of any rate hiking cycle. What hasn't changed in a material way is the end point, the destination. And maybe if you do a whole lot sooner, then that destination comes in a little bit.
We'll have to see. William Lee is with us now. He is chief economist at Milken Institute. That barely describes the completeness of his research note. There's any 5 ways to go here or not. But Bill, at the bottom of your note, I've got to go to the chronology for President Xi in China and what it means for our viewers, our listeners, and economics and markets worldwide. And that is a small matter of a 20th Party Congress in China this year. John Thornton and others say this is very important. Tell us why we should focus on the leader of China and his Party Congress.
Well, President Xi is not really assured his desire to be leader for life, because there's a lot of dissension within China, even though we from the outside don't really see it. And we have to keep in mind that Russia, Ukraine, and China, Taiwan are similar but very dissimilar. Russia, Ukraine has a lot of regional effect on local energy markets and European relations. But China, Taiwan will have huge global impact because Taiwan is the center of the semiconductor production and distribution, and that's at the heart of our global supply chain. So the key for Xi Jinping right now is, how do I tell my domestic audience I've got control? And the one thing that China's been obsessed with since the days of Kissinger and Nixon is Taiwan is China. And now how do we effect that? How does Xi Jinping make that happen? And that's the real thing that we're going to have to watch for, because while we're distracted by the Olympics, he's doing a nice hat trick with the other hand with Taiwan.
Bill, I think of my book of the summer last year, James Stavridis and Elliot Ackerman, 2034, which was just stunning. Like, folks, you'll see it, I'm sure, in a movie theater here in a few years or streaming on Netflix. And Bill Lee, the tension there is between the Chinese military and the leader, the politics of China. Do we have any understanding of that relationship?
I think if you know Chinese history, the emperor is in Beijing and the emperor is far away. That's the attitude that's always been in China. There are a lot of fiefdoms within China, and the military fiefdom is absolutely supreme. And that's why Xi Jinping made it so clear he is the head of the Red Army. But right now, the desire to regain Taiwan is something that is overwhelmingly strong, especially with the wolf warrior diplomacy that China has implemented. And China has really focused on domestic values and domestic goals for a modern-day socialist country, and they want that to spread to Taiwan at least, and certainly Hong Kong.
So when does a health crisis call Xi Jinping's hand? And I wonder this as he tries to clamp down on Hong Kong, and Carrie Lam, who came out and basically said, we're not doing lockdowns even as the cases surge. He comes out, Xi Jinping, and says, oh, yes, you are. Do them now. And you're going to treat it as though it's the most important thing that you deal with. And we're risking potential social uproar. What is the likely consequence for Xi Jinping? Can he win this and get what he's looking for in Hong Kong?
Lisa, I think the reality is that Hong Kong is but a shadow of its international past. When I was in Hong Kong, it was the international financial center for China. Now it's a provincial city similar to perhaps Wuhan. And Xi Jinping is treating the COVID policy of Hong Kong the way he treated Wuhan. Stamp it out and make it happen fast. And that is his way of exerting control over the little democratic movements that are going on, not only in Hong Kong, but throughout the world and throughout China, and the pressuring for him to change. He's certainly telling his domestic audience and the international audience, China's model is China's model.
Bill, this might be a concern from a democratic level, from certain, sort of Western countries, from a governmental level. It doesn't seem to be a concern for investors. And one thing that I'm struck by is that even as the PBOC contemplates easing policy yet again, you're seeing the Chinese yuan strengthen to about the highest going back 4 years to 2018. What sense do you make of this? I mean, do all of the measures that Xi Jinping has put in place actually give China a better chance at dynamism and faster growth in the future?
I think a lot of international investors are clinging on to that vision of, my God, if I could just sell one bottle of Coke to a Chinese consumer, I'm going to make billions. And I think that image is really changing. You guys have a great article on Bloomberg about how American brands are no longer in favor because of the shift in attitude toward the West. Nike and other Adidas is not looked at as favorably as it was before relative to Chinese brands. That's the shift I think global investors aren't realizing, that the Western partnership is not as valuable to China as it was in the past.
Bill, I imagine the C-suite and multinationals get the problem right now. How on earth do they satisfy a progressive base in places like America and satisfy the Chinese nationalism you're talking about in the mainland? Do they have to choose, Bill? That's the question that I've got, because for a long, long time, they're sat on the fence. In fact, for some U.S. corporations, they've lent towards China perhaps more than they have the United States and the goals of the administration, the White House. Bill, do they have to start choosing?
It's absolutely clear to me that C-suite policy toward China has always been pocketbook over values and principles. And I think the overlooking of things that are going on in China regarding human rights is something that is evident even more so now than ever before.
Bill Lee, thank you, sir, of the Milken Institute. Lisa, we've talked about that a while, haven't we? For a long, long time. That issue is becoming a bigger and bigger issue. In fact, it is today's big take on the Bloomberg terminal and available on Bloomberg.com. Nationalism in China has dethroned Nike. and Adidas.
At what point is China making the decision for them? And basically their brands getting out of favor simply because they're from the United States and reducing the economic perspective. I am struck, though, by every investor who comes on this show and still thinks that China is a fantastic investment. They want to put their dollars there. You are seeing that with their assets in terms of the value of the currency rising to the strongest in 4 years. How much are people looking past all of the political issues and just at the idea that they're easing, they have the potential to emerge first at a time when there still is so much uncertainty globally?
That's one piece of tension. Let's talk about the other between Carrie Lam and the Chinese president. This line here from Carrie Lam: we have no plans whatsoever to impose a complete wholesale lockdown, Tom. And then the Chinese leader, President Xi, said this: Hong Kong's government must take up the main responsibility to stabilize and control the pandemic as soon as possible as a mission that overrides everything. Some really strong words from the Chinese president for Carrie Lam.
And to me, what's important here, John, is it's every day. We're seeing stories off of our great Bloomberg team in Hong Kong and, frankly, all of the Pacific Rim about adjustments. It's the micro adjustments right now, John, is what I'm watching.
But, Tom, there's a shift there just in how directly the president of China is talking to Carrie Lam and to Hong Kong. 10 years ago, can you imagine something like that? 5 years ago, 2 years ago, 12 months, 6 months?
No, the shift is profound, John. There's no question about it. And again, I'm looking at micro decisions made by corporations of all different ilk, because Hong Kong is dominant. There's no question.
Let's reset through this price action, TK. We're down about a tenth on the S&P. On the Nasdaq, we're unchanged. In the bond market, yields 2.03%, going into retail sales in about an hour and 50 minutes.
Yeah, measurement here of COM is a stronger Swiss franc, going from a 104 up to a 105. That is, weaker Swiss franc and stronger euro. That's a little tea leaf, John. I'm watching carefully, but I got to admit, it's just simply waiting. Euro Swissies, like everyone else, waiting for headlines.
Lisa, crude getting very comfortable in the 90s, isn't it?
Yeah.
92, 93 on any given day.
Yeah, I think that you phrased that really well, because what you're seeing is a lot of volatility, but still staying at that sticky place that still is higher than a lot of people would like to see. You know, I go back to what Ellen Wald was saying yesterday when she came on and she said, you know, if you take away the Ukrainian tensions, maybe you get down in the 80s, but it's not going to go that much lower. And then if the tensions persist, it gets above $100. Well, you know, that's a pretty high and uncomfortable range, particularly for the election that's coming up.
Well, crude getting comfortable and the polls getting uncomfortable for the White House. You mentioned that a little bit earlier, Lisa. The direction of travel at the moment, not pretty.
It's not pretty, and I don't get the sense that the gas tax holiday that they were talking about is gaining a lot of traction. There were a lot of editorials bashing it, basically saying it's cosmetic. 18 cents off your gallon price isn't going to really move the needle. At the same time, it's really a massive issue when you have actual real wages lagging behind the price of inflation, and this will crimp consumer spending.
John, AAA unleaded, this is what we use off the Bloomberg, is what AAA does, folks. I know your price is different. Is $3.51. That's a two-day, not explosion, but nice lift up in price, and critically off the 18 cents Fed gas tax, John. I'm eyeballing here 13 cents since the beginning of February.
Brent crude at 94, WTI at 93. Coming up, 7:30 Eastern Time, Michael Collins, the Senior Portfolio Manager at PGIM, getting his thoughts on what's happening in the broader market, but also in treasuries. Is he a buyer of 10s at 2? I think he might be. 2.03% on a 10-year yield from New York. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. Investors will get fresh clues today on the Federal Reserve's next moves. Minutes from last month's policy meeting will be released. The speculation